over these tariffs between the EU and the US. Then we also had the Bank of England specifically talking about the negative economic downside risk potentials for GBP. They're talking about the potential to use negative interest rates, how they need to do more economic stimulus, how downside risks are still very present. Okay? Then you also had negative Brexit headlines between the EU and the UK. How it's very, very difficult to work on a deal. It's still possible, but it's very, very difficult. Okay? And then you also had, of course, Trump teasing about the US stimulus. This combination of events all coming through New York session for the period of about New York Stock Exchange open till about, let's just say, London close and for the rest of the afternoon, really started to change overall investor sentiment to be more on the fear side. This fear side investor behavior and market sentiment for those fundamental reasons led to a boost in the US dollar, a boost in the Japanese yen, and a boost in the Swiss franc, as well as global equities took a bit of a dip from that initial negative news. You can see Dow Jones, UK, and Germany as example when we're looking at the stock markets. Asian markets, Asia Pacific side, we're still holding a bit more solid as most of the negative headlines were impacting either the US or Europe or GBP specifically. Solid as most of the negative headlines were impacting either the US or Europe or GBP specifically. Solid as most of the negative headlines were impacting either the US or Europe or GBP specifically. Solid as most of the negative headlines were All right. What's going on, everybody? Nice little surprise here, right? Early start to the stream. Nobody was probably expecting this. Sometimes you gotta be spontaneous in life. Can you guys hear me? I know most people are probably still asleep. A lot of people are still gonna be asleep, so we're not gonna be going crazy. Like, I'm gonna be doing a lot of analysis. I was just looking at the charts already and starting to look at the quarterly charts, and I was gonna do the YouTube stream tonight anyways, so I was like, I might as well just start streaming now. Like, what's the difference? You know what I mean? Someone said spontaneous, like not showing up the past few sessions, right? Do you want me to end this stream right now? I could just go do the Zoom. Everybody, F in the chat for that guy. I can just go do it. We got the Zoom going anyways, you know, every night. So if the YouTube audience is complaining, you know what I mean? If you guys are gonna complain, let me know. That's what I thought, right? That's what I thought. No, I'm kidding. How are you guys doing, though? How's it going tonight? Welcome to the Capital Hungry. I'm just joking. Welcome to the Capital Hungry live market analysis stream. Someone said, don't be toxic. You're at the wrong stream, my friend. If you don't want any toxic negative vibes, you are at the wrong stream. No, I was just already on the charts. If you guys don't know, I know a lot of you guys have never even looked at a 3-month chart in your life. A lot of you guys don't even know that we're coming to the end of the quarter. A lot of you guys don't even know what the fuck that means. So I'm going to be showing you guys this type of stuff. All right? Some of you guys going quarter, what? What is this, NBA game? No, it's not. These are the markets. We're on a 3-month chart right now on gold. This chart's closing in a day and a half. It's very significant of how this candle's closing because it's the end of Q1. We're coming into Q2. You know what I mean? All right. Don't worry. Once we hit about 2 a.m. Eastern, then I'm going to do like the regular Zoom. We'll be talking about what economic events we have. But now I'm more just doing some raw analysis across these pairs that we were looking at and seeing how these 3-month candles are closing. What we can look at for potential repetition of history with the overall market optimism. Am I married to my cousin? No, I'm actually having a date tomorrow with someone named Mrs. Johnson. And surprisingly, your last name is Johnson. So, you know what I mean? You might want to check on your bitch. But yeah, we're going to be looking at gold, GJ, GBP USD. And we're going to be analyzing from the 3-month charts all the way down to the intraday charts. And seeing how these quarterly candles are closing and what this information can tell us coming into the next quarterly period next month and how we can use this information as intraday traders, right? All right, so for those of you who do not know, let's discuss some of the macro fundamentals and let's discuss a little bit of a fundamental timeline from, let's go 2020 onward, all right? So let's draw a little timeline here from 2020 onward, okay? So, how can I type here? So here we're gonna go Trump era. We'll say like late 2018, 2019. This is small text. Let me make this bigger. Let's see if this worked here. Yes. So this is I'm going from around 2018, 2019 on to now for just a quick macro fundamental timeline of how we had some market fear in the scenes and how we built up to this economic reset that was the pandemic markets. I'm gonna call this Trump era tariff man. So a lot of you guys remember that especially with gold, we were starting out around 2018, 2019, around the low 1100s, 1200s, because markets were fairly stagnant and economies were just starting to finally recover and rebound years later after the 2008 financial crash, right? So, right then and there, we had a shock with the US presidential election, something that nobody ever expected, and we had Donald Trump elected as the president. A lot of people were actually shocked, but he actually did a lot of great things in terms of bringing economic power back to the US. One of those main things that we were focusing on was trade war with China, okay? This trade war with China, which could potentially impact supply chains, global tariffs, was one of the first significant fundamental fear catalysts. And I don't want to necessarily say fear, but it was one of the first reasons why gold started to increase in value from that point. So for about an extended period of a year, we had all of this trade war drama take place. Right? And don't worry, I'm going to go from macro to micro. One sec, let me fix my mic here. What the hell is this? All right. Sorry, the cord is pissing me off. So you have to understand, when we go back to look at gold technically, or GBPJPY, also during this time, we also had Brexit going on, which was impacting specifically UK and Eurozone, but which was also bringing economic uncertainty, which was going on since 2015. But during this 2018, 2019, and of course up until late 2020, Brexit was also something that was bringing economic uncertainty to the Eurozone. At the same time, you had a lot of trade wars going on between countries, bringing potential economic uncertainty. At this time, when we had this shift in power for the US and Trump leading the way as the tariff man, we had this economic uncertainty in the Euro and UK zone. As economic data was starting to decline, central banks were more inclined to start cutting interest rates, okay? Then from that point on, and this did not just impact gold or the US dollar, this obviously impacted our pairs like GJ, and we're going to look at that on the higher time frame, because this economic uncertainty and macro market fear that was starting to ensue in the global economies, it has a direct impact on how investors are going to be moving their money. Now, when I talk about investors, I'm talking about the guys that actually move the market. You want to call them the whales, institutions, market makers. The ones we see actually make the moves that we trade day to day. Those who I call the investors, market makers, whales, whatever you want to call it, right? So this led to an increase in liquidity in safe havens such as precious metals like gold, or the US dollar short term, or the Japanese yen as well. And you had a lot of negativity on some certain risk currencies like the Australian dollar, which obviously Australia has close trade ties to China. So any economic negativity on China is a direct economic negative impact on Australia as well due to their close trade ties. You had GBP and Euro specifically weak due to Brexit, and then you had the safe haven currencies like the Swiss franc, Japanese yen, pretty a lot stronger and a lot more bullish technically, right? Due to these fundamental macro sentiment. After the trade war coming into late 2019, as this trade war was still active, Brexit was still active, we started to enter almost World War III. We had Iran tensions popping off. Now, this could be an entire webinar in itself, but basically Iran has something that the US and Saudi Arabia wants. One being oil, another being control over the Strait of Hormuz, which you guys can go research that a bit of yourself. And another main reason is Iran is one of the last few countries without a central bank. Right? Every single Middle Eastern country that has wanted to go against the world reserve currency of the US dollar or the petrodollar, or they wanted to go against the central banking system, has essentially been labeled as a scapegoat. Their country gets raided, or they get labeled as terrorists, wherever the fuck it is. Their country gets raided for their resources, gold, money, supplies, oil. A puppet government gets put in there, a central bank gets put in there, and it's basically now following the rest of the Western world, right? Iran is one of the last couple of countries, besides like fucking North Korea, the Strait of Hormuz, not Hormoves. The Strait of Hormuz, all right? But anyways, Iran is one of the last few countries, besides like North Korea, where we all know nobody's fucking with North Korea because all their nuclear power, right? And they're not in the Middle East, they're in Asia. And they're one of the last few untouched countries, you can say, by Saudi and the US, right? That still doesn't have a central bank, that is still shipping out their, that still has been before the pandemic, was shipping out and exporting their own oil to China and other countries in that area, and they controlled that Strait of Hormuz, which is a major oil route, like an oil delivery route, right? Shipping route. So what did you guys see start to happen late 2018, 2019? It didn't just go into straight conflict, but first Iran started to get sanctioned on their sale of oil, right? And anything I'm saying here, don't just take my word for it. Go research it. Anything I'm saying here, go research it, right? So the fact that the US and Saudi were looking to sanction Iranian oil, meaning they're trying to restrict anybody purchasing from Iran so they can funnel the demand of oil towards them, right? And they're sort of trying to do the same thing with Venezuela and any other countries that they've done. But what happened is Iran has a lot more support of some certain allies, being China and Russia. For an extended period of a year, even with the sanctions on play, you had Iran still exporting oil backdoor and China buying it up, right? Because why would China and Russia want all the oil demand in the world to be strictly funneled to Saudi and the US? That's too much control for a certain party, especially with something as powerful as global oil that impacts every country, right? You slowly start to see this escalate. You slowly start to see these Iran tensions escalate over the year, where it eventually comes to that Iranian general being killed and almost leading into World War III. In my opinion, if Hillary Clinton was president, or Biden somehow was president earlier, I feel there would have been a lot more conflict in the Middle East, and the potential for a war on Iran would have been a lot higher. I do feel Trump did a good job going to Russia, going to North Korea, and at least having discussions with these countries where everyone thought he was going to go start wars. He was actually going to for peace. You know what I mean? I do feel if it was the other side of the political party, they would have went straight to fucking war, just like Bush and the gang and all of them in the past. You know what I mean? They would have not played any games. They would have been straight bomber jets over Iran. But anyways, yeah, exactly. Don't worry about that. That Iran war. So remember, this stuff is still active. Like the trade war between China and US never got solved. It just got put on hold. And then, exactly, Trump wanted to boost the economy. He wanted to bring power back to the US. That's why he was taxing other countries. That's why he was bringing more jobs and creating more jobs in the US. You know what I mean? People don't understand the economic benefits that Trump was bringing to the US, right? And I have a whole webinar on the central banking system and how the debt structure works and how everything runs on debts, etc., etc. But anyways, so this is still on hold, and the Iran tensions are also still on hold. Like you guys are seeing, like these are not off the radar yet. Everything got put on, all of these fundamental catalysts got put on hold for the pandemic, right? Now, you can see that we had the trade wars, we had the potential Middle East conflict and the potential war in Iran that was escalating. Then we had the pandemic markets. So when you're looking at something like gold, you can see since late 2017, 2018, an extended upside move. When you're looking at something like GJ from late 2017, 2018, pretty much bearish. When you're looking at something like GU 2017, 2018, it's fundamentally and technically on the higher time frames bearish, because during that period of economic uncertainty, your risk currencies are a lot weaker and your safe haven currencies are gaining strength, right? So understand that from a macro perspective. Now we have seen that the pandemic markets have been digested and understood by investors and almost priced in the sense that the fear from the pandemics is not nearly as strong as it was like March 2020. We thought the world was like ending, whole global lockdown, everybody was shocked, right? But we can see and we can look at this by identifying something like gold, as we peaked new all-time highs on gold, similar to what happened after the 2008 financial crash, when interest rates get cut, there's mass amounts of economic uncertainty, all the liquidity is going into your safe haven currencies and coming out of your equity markets and coming out of your risk currencies. You have this heavy extended move, but there's basic investor principles that impact anything. As those fundamental catalysts get priced in and almost corrected in the real world, meaning, for example, after the 2008 financial crash, it took about 2 to 3 years for economies to start recovering, right? That's when you see gold start to finally have a correction move around 2012, 2013. Because there's no longer any reason to keep pooling money into gold as economies are recovering. Interest rates are starting to be increased again, and we're going back to a recovered economic state, right? Now you see from this high point, investors sell from the high, they bought from the low, exit positions from the high, and you get this pullback phase that doesn't break overall bullish structure. We had this consolidation, and then what I was telling you guys about that timeline from 2018 onward, where we had trade war, we had Iran tensions, we had pandemic market, right? Now, all of that fear has been priced in. We already saw GJ do its crash March 2020. We saw the global stock markets do their crash March 2020. We saw the central banks jump in and provide the support they needed. And you also have to understand, compared to the 2008 financial crash, the crash itself and the recovery was almost light years faster. Because in my eyes, it was almost like it was not planned, but I would say it's planned. I would say this is all planned. These are money-making moves. There's always a fundamental catalyst that lines up with these economic cycles, right? But you can, if you don't want to say like a conspiracy, like it's planned, you can see that the central banks acted a lot faster than they did in 2008, as per the cutting of the interest rates, stimulating the economy, massive printing of their respected currency and flooding the markets. The how fast the market crashed and how fast it recovered was night and day difference to 2008. But the technical impact was exactly mirrored, right? So what we can see here with gold now is that at these all-time highs, similar to after what happened at 2008, we're starting to see technical exhaustion and positional buyers exit positions, and starting to see sellers jump in as well. From a price action perspective, right now we're on the 3-month chart. Why am I on the 3-month chart? Because the quarterly periods in the real business world have a lot of significance to banks, to businesses, to investors, right? Q1 through Q4. You have quarterly reporting, you have quarterly rebalance of flows, etc. So right now we're coming to a quarterly candle close pretty much at the end of this week in another day and a half here. You can see this is a very strong 3-month bearish candle close we are getting, where if we have continued market optimism and the next quarterly candle pulls back and still respects intraday bearish market structure, which I'll show you guys when we start zooming down the time frames, there's a lot of room for this potential correction phase, right? Just like And this would be like coming right back down to like the deep 1500s. A repeat of history, historical repetition, technical repetition. The only thing was the story changes. The fundamental impact is the same. The story changes throughout history. You know what I mean? The characters and story changes, but the impact, the bullshit, the corruption, the greed, that's all the fucking same. Understand? So now when you guys see this about how gold, which is a safe haven precious metal, of how it inflated during times of economic uncertainty, how years later when we started to have recovery, we had this correction phase. Now look at what the pandemic markets, trade war, Iran tensions, we inflated to new record highs, also with US interest rates being low. That's a bullish confluence for gold higher time frame. But anyways, we inflated to new highs. Months later, as the pandemic started to get digested, and what else did we have? Economy start to open up, and vaccines, or at least the talk of vaccines. Remember, investors are always 2 steps ahead of the mainstream media or of the real world, I like to say it. Investors don't need to wait for the actual vaccines to be proven they are working and actually for everyone to be vaccinated. As soon as the rumor of vaccine distribution and development is coming out, they're already jumping the gun on their trades. That's human greed at its finest, and that is the concept of pricing in. Whenever you hear the concept of this is already priced in, it's because investors are jumping in ahead of the curve due to a rumor. Just the rumor of vaccines coming out is a potential solution to the pandemic. You understand? So they're jumping in ahead of the curve. So we had the pandemic sort of fear get simmered down. We started to get out of the lockdown phase and economies open up. And fucking out of the blue, every single country 5 months later shitting out vaccines like it's fucking candy, like it's Smarties, like they're buying at the convenience store. You know what I mean? So now you have the AstraZeneca vaccine, Pfizer vaccine, Johnson & Johnson vaccine, Sputnik V from fucking Russia, China's vaccine. Which we have to understand, no matter what you feel about your personal bias towards vaccines, that you have to understand that's bringing market optimism. Okay? The same time you had that, and the same time you had the support of the central banks flooding the markets, you had global stock markets do a massive V-shaped recovery across the board. Right? Every stock market region across, doesn't matter where, did the same thing. From this massive melt to a full recovery. So if the Fed stayed to printed more money, we can see a strong US dollar. That doesn't make sense. If the Feds are printing more US dollar, that equals an oversupply of the US dollar and an inflation. Supply and demand are core economic principles that impact any service, product, currency, doesn't matter. When you have an oversupply of a good and a decreased demand of it, the price of that or the value of that good, service, or currency drops. That's just common sense business and economics, all right? It doesn't matter if it's gold or oil. Another example of that supply and demand is when you had the pandemic hit the scene and the globe was locked down, oil heavily dropped in value because you had a massive oversupply of it and overstorage of oil around the world, but a heavy decrease in demanded consumption because you had all these factories and industries shut down. You had billions of cars off the road. You had less oil being used day to day, a decreased demand for oil. Nobody wanted to pick up the futures contract and the price of oil dumped. Or for the inverse, the supply and demand impact on gold during the pandemic. When the pandemic hit the scene, you had the supply of gold being limited because global delivery was being shut down. You had borders closed. Gold could not be delivered on time as per futures contracts and contracts agreements between countries, businesses, banks, whatever it may be. But as the supply was limited on gold, the demand was heavily increased. So gold's value went up, supply and demand. That impacts anything. Right? So what you can understand is as the Feds have been printing out more US dollar, when you look at the US dollar standalone, and you were to pull it up on, like, let's just say the daily chart, ever since the pandemic markets, which was March 2020, it has been extremely bearish. This is the dollar index, right? Why has it been bearish? If you guys are paying attention to what I just said. And give me 1 sec. Type the answer in the chat. Just give me 1 sec here. Someone just calling me. Why has the dollar been bearish? All right. Sorry. Fed. All right. First of all, the retard spamming. You think I'm going to answer your question when you're spamming a chat? Oversupply. Thank you. So, first of all, the Fed's not actually printing any US dollars. There's no actual printing going on. It's just a digit on a screen, but they call it printing. It's just an increase in the money supply that they do, right? So that's telling you exactly supply and demand. Pedro gets it, just like the Wolf of Wall Street. Sell me this pen, supply and demand. It impacts anything, supply and demand. Thank you guys. All right. So that's why the US dollar technically has been so bearish, because it's been oversupplied. The Feds are increasing the money supply of the US dollar and taking that money and putting it into the US stock market by buying bonds, by buying government bonds, by buying government or stock ETFs, by buying corporate ETFs and bonds. Okay? So that's why the US 30, the stock market, has been the inverse. You can literally look at the money going from the US dollar, from the Feds, and going into the stock market. You can literally look at it. Right? Understand? Exactly. Now, what I was telling you guys is the same way that gold can potentially now enter a corrective stage if we have continued market optimism, right? Look at what GJ did. GJ is going to be pretty much the inverse of this in a sense, because GJ, 2008 financial crash, this was an economic recovery stage here. Okay? So you had the 2008 financial crash, and then you started to enter bearish market structure for an extended period of time, and then you had this economic recovery stage, which is the inverse of what I was showing you guys gold did, because obviously when you're having an economic recovery stage, there's less demand for safe haven currencies and less money going into the safe haven currencies and more money going into the stock markets, more money going into like the risk currencies. Right? And then we come to this demand area, sell high, buy low, sell high, buy low. After this was Brexit. You entered this bearish market structure stage, and now look, if we have continued market optimism, what's the potential we can see? Yo, Justin Corpin, why are you spamming for my, why are you spamming the chat? Justin Corpin, you monkey retard. Why do you think I would answer some guy spamming the chat? You got a stupid profile picture, you got a stupid name, and you're coming spamming the chat. And now you're just gonna get called out, and now you're gonna feel stupid. You know? Larry Williams, you're also a retard. Let me school you guys, all right? I'm not talking about a fucking correlation. You guys don't... This is too much sauce for the YouTube community. You know what I mean? It's very... I'm not trying to be rude. This is going to go over 99% of your heads, okay? This has to be rewatched multiple times with notes taken and the information also studied. Everything I said also gone to research yourself, because this is going to go over your heads, all right? I'm not joking. I'm not trying to downplay your guys' intelligence or IQ, but this is going to go over the 99% of people's heads. You know what I mean? So there's not a direct correlation between gold and GBPJPY, but you have the correlation that they both operate on macro market optimism or market fear. That's why during the 2008 financial crash or during Brexit, you had these downside moves. Brexit, down, because GBP weakens and the Japanese yen gains strength. 2008, down, right? This was the pandemic crash where we still failed to break these historical lows. And look what happened years later after the market started to recover. Years later after the 2008 financial crash, 2011, 2012. Right? When the same time you had this upside correction on GJ, 2011, 2012, post 2008 financial crash, and you start seeing safe havens weaken, which means the Japanese yen is getting weaker during this period in time, is the same time you're going to see gold during 2011 and 2012 have this bearish corrective move. Do we all understand why before I move into the next concept? Or do I need to explain it again? I know the Zoom chat obviously understands that. Do you guys understand that? The economic cycle, the fundamental catalyst that caused these downside moves, the timing you can see technically, whether it's GJ or whether it's gold. Okay? All right, perfect. Now let's use this information to estimate some trades in real time, right? To project trades and analyze what we can see coming for the next month, for the next quarterly period, all right? So for gold, if we have continued market optimism, meaning flood of vaccine headlines, and you can see that on the monthly time frame as well, we're continuously printing lows and respecting bearish corrective structure, right? You can see essentially we have been playing in this descending channel for an extended period of time. As long as we have continued market optimism and economic recovery, there is higher potential gold will do deeper correction on the higher time frames. Meaning when we start zooming into our intraday time frames, it's easier when you're playing this structure. Yes, you can take advantage of great buys. Don't get me wrong. Every time gold has created an impulsive low, you get the profit taking happening by sellers and you get buyers jumping in, which can create very aggressive pullbacks as long as you monitor the day-to-day structure accordingly and you play the market structure accordingly, right? But overall, in this structure with the market optimism, we've had much stronger impulsive sellers moves to create those new lows. So over the next, with this monthly candle pretty much coming to a close in the next couple of days and the quarterly candle coming to a close, I'm still looking to play some of the seller's bias, especially for this new month. If we could get a pullback to even retest the 1740s again, just to create that upper wick, or even just continued bearish pressure, I am looking to retest some higher time frame bullish market structure and come down to this order block just for a higher time frame projection. And you know what? And you know what Iron Man's gonna be doing as gold is dropping 7,000 pips? He's gonna be scaling in buys. Don't do that, guys. As gold is gonna be entering this potential corrective stage, do not start entering buys and scaling in buys, praying it flips. That's not smart. Anyways. So let's be very mindful as we're watching gold for the new month. But that's what I just want to talk about on the higher time frames and what I want to talk about with that overall market optimism, right? Because we still have the flood of vaccine headlines. We still have that continued support from the central banks. We still have this technical bearish market structure and price action being respected. We do have the potential for this historical repetition and this corrective stage as economies enter deeper, as economies start to recover and buyers start to exit more positions on gold and sellers jump in. And then when we're coming to the intraday time frames here, you can see that the upside has been fairly corrective. This pullback we had here, even though the upside move was very good and we were watching the bullish market structure, it retested this previous low and failed to break higher. Right? You can also see that we broke bullish market structure on the intraday time frames. You can also see that we broke bullish market structure on the intraday time frames after having this consolidation phase and finally breaking below 1721. All right. So even overnight, I am more in a sell bias. The private chat, I already sent them a webinar earlier in the day, and we've already taken some sells at 1715. I caught as well. For everybody else, what I'm looking for overnight is either a break below this medium zone at 1705 continued sells, or another retest of 1715 and continued sells. We can see the market optimism at play, even the short-term US dollar strength, as it's obviously gold against the US dollar. You can see that we failed to break these highs. I was in a bullish bias on gold on the intraday time frames from 1680, 1710, and 1721. Even when we were having this consolidation, I was still in a bullish bias. I finally switched when we broke below 1721, which I was telling you guys. Right? You can see the new daily candle has already retested 1715 and created its upper wick too, right? When we're coming here to the daily time frame. See how the daily candle already filled this range, broke the low, created that upper wick at the key level. With the London volume, it does look good to revisit those 1700 lows and even potentially 1680 lows. You can see all this liquidity that we're now validating as sell side liquidity, that we finally broke 1721. And we're looking to start targeting these ranges to the downside. Understand? And even when I was telling you guys, like in our previous London sessions, for who was here the previous London sessions? Remember I was telling you guys, don't trade this gold range. If it breaks above 1739 with clean candles, we can continue buys, no problem. Otherwise, put a sell stop at 1721, because if it finally breaks below there, that's easy sells. Right? So you can see the sells from 1721 impulsively ran very well. We also got that pullback to 1715 and 100 pip play down as well. Now, just for trades for London session, we are starting to get a bit of exhaustion here. I would only be looking for gold buys above 1715, where we've had some rejections here late New York and with the new daily candle over Asian. If we come to 1715 and reject again, I'm looking for sells. If we break below 1705 at the low, I'm looking for sells. I'm only now looking for gold buys above 1715. I would need to correct this downside move and come above this little price sensitivity zone and come above our key level for gold buys. Or another gold buy option would be if we come to 1680 previous lows and fail to, like, if we, let's just say we do get our sells and we go to 1715 and melt, or we break below 1705 and melt. If we make our way down to these previous lows in 1680 key level and start to get exhaustion, I'd also be looking for buys here. So I'm only looking for gold buys above 1715 or at 1680. Otherwise, I'm primarily overnight going to be in a sell bias, and we've been in a sell bias since the break below 1721 and the retest of 1715. All right. Yeah, what time is it right now? It's 1 a.m. anyways. So we have new 4-hour candles as well opening up, and like these 4-hour candles are closing in the next 2 minutes and 45 seconds, and new 4-hour candles are opening up. So we can see that we're still getting a pretty nice bearish candle close. This did wick lower at least. We have to be very mindful of these previous low points. But yeah, I am just looking for pullback sells, break below sells, potential buys from here. I'd only be looking for buys above 1715 again. If we fail to break these lows, these previous lows, and correct this downside move and come back above the key level, which would show me something like this, which would show me just us coming back in the range if we have an aggressive bounce from the sell side move, right? So only buys at 1680 or at above 1715. Obviously, when we're watching price action on the lower time frames in real time, we'll adapt to anything accordingly. Like, let's just say we see a great lower time frame support being formed like at 1698 instead of like 1680. We could still get a great buy play if we do get those price action confirms, just like you've seen many times before, right? Yeah. GJ. Now, obviously the higher time frames on GJ, this quarterly candle is going to be closing pretty bullish, and it's almost going to be mirroring like when this candle started breaking out of structure after having the macro lows being bought up and getting that economic recovery stage. You can see the potential technical repetition. And you can see the potential historical fundamental repetition as well. So I am looking, especially as GJ on the intraday time frames is still very bullish, I am looking for just this candle to close very bullish or as is over the next day, the next quarterly candle and monthly candle to create a lower wick and retest bullish structure and just keep making our way up unless we have any fundamental market fear. Unless there's a fundamental reason for GBP shorts or Japanese yen strength, whether COVID has a wave 4 and we have another global lockdown, or we actually end up going to war, like the US goes to war with Iran, or Brexit gets completely reversed and goes back to square one. There has to be a fundamental catalyst that's going to stop this greed train by investors. Because if you were an investor buying GJ and scaling in every fucking buy, why would you want this to stop? Do you get what I'm saying? Why would you want this greed train, this choo-choo train of financial gains to stop? You will need a real strong fundamental catalyst to shift that market sentiment and investor bias. So very bullish, you know what I mean? Yeah, something like that, you know? Zombie apocalypse, I don't know, aliens, who knows? Nowadays, could be aliens coming to the scene. Monthly, the historical repetition is very validated as well. I would be cautious of this order block on the higher time frames we can dig up to. But the bullish price action and market structure is looking great. There's no reason to sell GJ. Only retards have been trying to sell GJ and call it top. Retards have no idea what's going on in the markets. They think a reversal's coming every time there's a pullback. They think it's a reversal. You know what I mean? They think they know what's going on. I don't know. Fuck. There's no reason. All GJ has done since March 2020 is pulled back, create a high by buyers, profit taking, pullback, new high. Profit taking, pullback, new high. After November, December, the pullbacks got even smaller and smaller. The most aggressive pullback we've seen was like last week. You know? All you've had to do is be able to identify the pullback phases with some bearish market structure, which we do all the time. You guys, how many times have I shown you guys this? All right, so look, there's only two ways that liquidity can be generated in the market that us traders view technically, and you can have a continuation in the trend. Either you have an impulsive upside move, buyers print new highs. At these new highs, they take their profits out of the market and sellers enter the market to relieve them out. As they take their profits out and sellers jump in, you have price get pushed down to a more favorable demanded price, supply and demand, exiting at the supply area, going down to a demand zone, a demanded zone of price for buyers to continue in the trend. Get what I'm saying? Supply and demand. And which is also usually ends up being a 50% correction of the impulsive upside move. Meaning if you had a 100 pip upside move, you most of the time get like a 50 pip correction, which all of you fuckers know as like a Fibonacci retracement. You know what I mean? It's just the profit taking and price coming down to a demand area. So there's two ways you can have a continuation in the markets. A high printed, profit taking, a pullback, a failure to break that pullback area at the 50% correction point or a previous high or a demand zone, and a continuation up to that high and new highs. Or you get a high printed, a consolidation phase in liquidity zone that doesn't break overall market structure, and then a breakout of that liquidity zone and a continuation. Right? So on GJ, you can see that any pullback phases, you can identify these pullbacks by mapping out lower time frame bearish market structure or consolidation phase. And I'm going to show you guys this a lot more refined. And if it's in the pullback structure, the consolidation phase, it can be weeks long, it can be hours long. It doesn't matter. As soon as you validate the breakout of the consolidation, as soon as you validate the breakout of the bearish corrective structure, you're running back up to the trend with the trend. Understand? How many times have I shown you guys this? You guys who have been watching my streams. And how many times have we played this? How many GJ buys have I blessed you guys with full confidence due to this simple concept and the fundamentals still being overall optimistic? Come on. 100 times? 1,000 times now? Jamar, would that day-to-day news be enough for you to want to stop this greed train? If you were the smart money that's making millions to billions with this choo-choo train of financial gains, would that be enough for you? Think about it that way. If you were in that seat, would those little day-to-day things be enough for you to fully exit your positions? Switch out of your bias? Fuck no. Exactly. So now, what we can identify here was that at this new high that was printed by buyers, we had profit taking happen. We had a break of some minor intraday bullish market structure and intraday bearish structure created. As soon as you break out of that bearish market structure, it is the easiest buys. And I'm going to show you guys this zoomed out. And sometimes the corrective structure and pullback structure, it can run for hundreds of pips or it can run for 50 pips. All you have to do is map it out. Right? As soon as you have that high printed buyer's exit positions, you start to notice the exhaustion. Double bottom. As soon as you break above that structure, you run back to those highs and potentially new highs. Here, look, you're having a strong sell-off, no break of structure, finally some exhaustion here at this previous low point. You finally break of structure, buys to the high. Right? And you can also, if you want even more confirms, go look at your Japanese yen standalone. Look at your Japanese yen structure. Even if you don't know how the Japanese yen behaves fundamentally, that it's a safe haven, and that when the markets are optimistic, it's going to be weaker, look at the Japanese yen currency index, the structure of it. You guys can look at a trend. This is bearish. So if the Japanese yen standalone is bearish, if UK stock markets are bullish as fuck, if you still have the support of the central banks, if we still have higher time frame bullish structure on GJ, why sell? Let the pullback phase happen. Let the consolidation phase happen. Right? Let the consolidation phase happen if it's for a few hours. As soon as you break out, you're getting your move. Let the little pullback phases happen as a high is printed. Right? I understand that breath plays, but what I want to tell you guys is this is not me telling you guys something after the fact. In every single one of these live streams for maybe 5 months now, I've been telling you guys GJ buys. I've been telling you guys buy GJ. Wait for the pullback, buy GJ. Let the consolidation break out, buy GJ. I've been telling you guys buy GJ here. Of sellers pressure.
Look, ready?
On
Wait.
And JP activity.
What's this? What's this? From 140. What's this? Huh? What's this? What's this 5 months ago? I've been telling you guys. And you guys see what? Oh, wow. Look, do you guys see that big 3-month candle that's here right now? Let's go back to that screen, shall we? Let's go back to that screen, shall we? What's this? What? Wait a second. Was this for free on YouTube? 2,000 pips? We did hit close to like 155 almost. The same thing I was telling you guys about historical repetition. I've been telling you guys for 5 months. Buy GJ. Once it breaks above, just buy. Scale in, buy. What chart is this exactly? What chart is this exactly? This is the 3-month chart. So look, 3 month there. And 3 month here. Ready? Oh my God. Come on. And I'm telling you guys all this with the fundamentals, with the technicals. And this is all for free. And this was a 16-minute webinar. Psh. Magic fucking yellow lines. The magic yellow line indicator right there. Alright, so you can't tell me, oh, but you're gonna forget these concepts when you're actually live trading. Fuck no, we don't. I've been telling you guys, fundamental and technical analysis, go watch it. What's this? That was, where was that one I just looked at? That was here, right? Wait a second. This is 7 months ago. No, this is the wrong one. Where is it? Oh, this. This was 8 months ago when we didn't have the economic recovery stage yet. But once we do, we're going to fill this gap. This
case is spreading.
This is 8 months ago when you have the economic recovery stage. 8 months ago. I told you guys 8 months ago. I told you guys 5 months ago. I told you guys in every single live stream since that point. All right? I told you guys in this GJ analysis.
Welcome.
So don't tell me about that. You guys can't tell me. And guess what? Gold, I told you guys the same shit. Euro USD, I told you guys. They're all here. This was for free. This was ahead of time. This was 8 months ahead of time. I even told you a week ago. Yeah. Right? I'm telling you guys today as well. But I'm not telling you guys today because we're coming to the end of the quarter and we have to be cautious to buy GJ today because we're back to these highs. All right? We have to be very careful with GJ. I can still see us getting some potential scalps up to these highs, but we have to be cautious because of what? If you guys look at your screen, what are we coming to the end of? We're coming to the end of a quarter. We're coming to the end of a month. So there's higher probability, in my opinion, that if we don't break these highs technically by buyers, right? And if we exhaust here again, that with the end of the month, with the end of the quarter, there's a higher probability of profit taking for a deeper pullback and to set up the wick for the new month and the new quarterly candles and then continue up possibly for the month of April forward. You know what I mean? The safest buys technically at this point would have to be above these previous highs or at least scaling up to that point still. We have to be very cautious. In Capital Hungry, these guys already milked buys as soon as we broke out of this bear structure. From 149, we wrote it up. Tell them, guys. Zoom chat. Tell them right now. I'm gonna put you guys in the middle of the screen. Tell them. Tell them. Tell them. Say we've been buying GJ. For 8 months, we've been buying GJ. So, with the same concept, supply and demand, the profit taking by buyers, highs still being printed, the trend, the structure, and the overall market optimism. How do I observe if markets are optimistic or if they're fear-filled day to day? Or from a macro perspective, I look at how the global stock markets are moving across the world. Look at why are global stock markets all moving the same no matter what region? Crude oil, Captain Jack, is also heavily bullish with market optimism because remember I was telling you guys about the supply and demand of oil and how those fundamental concepts of sell high, buy low. Oil's historical lows got bought up when it went down to crash due to a fundamental oversupply and decrease in demand caused by the pandemic and lockdowns. But as economies opened back up, especially China, oil consumption started going through the roof, especially in China when China beat coronavirus like 6 months ago, if you guys haven't noticed. They fucking beat that shit like last year. You know what I mean? And their industrial production, their overall economic productivity has been fucking going through the roof since then. So their oil consumption has been massive. And overall, just a lot of economies have been opened back up and markets have been optimistic. So the demand for oil has been more regulated. It's been increasing again. Consumption of oil is increasing again. And the supply is becoming more regulated as that storage is starting to get eaten away at. So as long as markets are optimistic and economies are opening back up and there's vaccine talks, this is a bullish confluence for oil because oil investors are going to see this as, yes, more consumption of oil, more industries opening back up, more factories back open, more cars on the road. You get what I mean? Does that make sense to everybody? Yeah? Makes sense? Makes sense? All right. Exactly. So our global stock markets across the board are still extremely bullish due to that support of the central banks and that market optimism, the pandemic being priced in and digested, the vaccine talks, economy slowly opening back up, or at least there's a lot more countries open than there were start of March 2020, right? You can see, even though the dollar's had quite an aggressive bounce from these lows, and due to what the Federal Reserve said during their interest rate announcement, the dollar overall has still been very bearish because it's fundamentally a safe haven currency. The US dollar is the world's reserve currency, and it always will be, right? So as a safe haven currency, and due to that oversupply, it's been bearish. The Japanese yen has been bearish, which is a safe haven currency. Gold market structure on the intraday time frames has been bearish as ever since those 2075 highs have been peaked. We've been playing in this bearish corrective structure, and that's a precious metal safe haven. This is telling you markets are optimistic. Investors are still optimistic. They're still confident in economic recovery. And you can see it right there, right in front of you. Isn't it crazy? Like when all those dots connect like that? Obviously, if this is all new information to you, it's not going to connect instantaneously. But for a lot of people who have been following my streams or have been watching my webinars, come on. Right? It makes a lot of sense. It brings together what's going on in the real world alongside real investment principles and the technicals that we use day to day. I used to use COT reports before the pandemic market. The pandemic market really shifted all of that order flow and really made it easier to read just based on market sentiment. It's like, for example, you don't really need to read the COT reports when you know that markets are fear-filled. Your dollar's going to be strong, your Japanese yen's going to be strong, your equities are going to be weak. But when markets are optimistic, we're going to see what we're seeing in front of our eyes now. Right? All of these concepts I'm sharing to you guys are being proven by the technical charts. And there's no indicator involved. It's no secret system. It's real world fundamentals and economics alongside the technicals. Right? But anyways, I need a quick little breather. And as we're coming into like the regular stream start time soon, about 10 minutes, and I'll be back in like 5-10 minutes, and then we'll start doing some analysis for trade ideas on gold, GJ, GBP, USD, Euro USD, USD CAD, and US 30 that we can potentially take over London session tonight. All right, so just give me about 5-10 minutes. Hopefully you guys enjoy this stream. It's a lot of information, so make sure you share it around with everybody. It's gonna end up being like a 4 or 5 hour stream. But the first hour and a half right now is just a lot of information and just analyzing the quarterly charts, historical repetition, right? And yeah, for all that analysis, I got the receipts. The trades taken as well. Make sure you guys join the Capital Hungry Analysis channel and everything else as well, eh? All the Capital Hungry free resources. Yeah, we haven't started the actual London live stream yet. This was more just like a fun, I was already doing analysis. I thought I just might as well start streaming. You know what I mean? More just like information. What the fuck? Oh, someone's calling me. Right? So now we'll actually start jumping into our stream like how we normally do it. We'll start analyzing charts on the intraday time frame, seeing what we can take advantage of. Obviously, you guys already know I'm more in a gold sell bias. You guys know I'm more in a GJ buy bias to at least revisit these highs. But I will be talking about that, like price action on the lower time frames. Like obviously we go to the 1 minute time frames we're looking to execute, right? I was just doing some more macro analysis across some of these main pairs. Also, Euro USD sells. If the US dollar holds strong, EU sells below these lows are looking nice as well. UCAD buys. UCAD buys at the key level are still looking solid as well if the dollar's strong at 1.258. Euro USD sells below the low at this medium term zone here at 1.765 as we never broke the bear structure and we had that 40 pip sell played down. And with these sells, I'm looking to continue to print a new impulsive low when we're looking at the structure. But I'm going to talk about these in more detail in about 5 to 10 minutes. I'm just going to go like grab water, go to the washroom, and then come back fresh and we'll do our analysis, all right? So just give me 1 second here. Okay. All right, let's get it going. 1:30 a.m. Eastern. We're gonna be running through the normal capital hungry London trading session stream here. I'm just waiting for some of the people who usually join at this time to come in, and then we're gonna be running through our normal process. Sorry, I went to open a window. It's getting steamy in here. All right, let's get this going now. Before we get into it, for those of you who are new, there are some stream reminders on your screen for the YouTube audience there. This is not direct financial advice, but feel free to ask questions about technicals, the charts, fundamentals, and the overall markets. All right. Do not ask for direct signals or start spamming the chat for stupid shit. You know what I mean? Any questions about the Capital Hungry private service, please keep that out of the YouTube chat and message me one-on-one about that, or go to capitalhungry.com. Make sure you follow all of the Capital Hungry free resources, such as the news Twitter, Telegram analysis channel, and of course, like and subscribe this video and check out all the webinars on this page as well. Now, as we're going to be doing analysis for trade ideas to execute during London session, we have to remember, as traders, our job is not to just do analysis on the markets, make money, and take trade after trade, right? It's about being very selective and disciplined and being able to reap the rewards on planned trades following our risk management plan, trading plan, and focusing on the long-term vision. All right. So with that being said, make sure you stay smart, you follow your trading plan, your risk management plan, you focus on your long-term vision, not short-term satisfactions or short-term impulsive desires. Try to stay as emotionally neutral as possible, and this will lead to the highest probability of you surviving in the markets and not crashing your fucking account. All right, we have to give those reminders. Economic events on the docket. It is a quiet night tonight as per economic events. We do not have any economic data through Euro and UK session that's going to be impacting any of the main pairs we look at. So we're going to be primarily looking at the news terminal to the left of your screen here for any reactive headlines. Yes, Sneaky Snake, I am going to be talking about that 1705 sells or 1715 retest sells. All right, but if you're trading New York session at 10 a.m. Eastern, there's the U.S. Consumer Confidence Report, which does impact the U.S. dollar, gold, and U.S. equities. And then later during Asian session at 9 p.m. Eastern, we do have China's manufacturing production. So no economic data that we have to primarily focus on overnight, just any reactive headlines, like if we get any market fear or any optimism with continued vaccine headlines or anything else we can use to our advantage, you'll see that to the left of your screen here. So far, hasn't been anything too crazy. Some key fundamental points that we have to understand is that overall markets are still very optimistic when we're looking at the equity market strength across various regions. We still have the support of central banks for their respected economies. Specifically, we saw how the Feds are signaling at continued financial stimulus for the U.S. economy and the U.S. people, and no signs of increasing interest rates anytime soon. All those supply chain issues via that clogged canal have also been fixed, but we have to be very mindful of the market timing as we're coming towards the end of a quarter and the end of a month. And this is also a short week with a holiday at the end of the week, so we can see some potential profit taking by traders in the market that can create some more aggressive pullbacks to set up for the following month, right? So just some recent fundamental points to be aware of there. Now, let's start off with some analysis on the intraday time frames and overall, starting off here on gold. As you guys know, we have been playing this gold bearish market structure for an extended period of weeks until we finally got a shift out of the structure. Let's go here. So we're playing this gold bearish market structure for an extended period of weeks until we came to the 1680 1700 lows, where we noticed buyers exhaustion at a higher time frame key level and finally breaking out of bullish market structure, printing a new intraday higher high. You can see from this higher high point we had an aggressive pullback that failed to revisit the previous low and ended up actually creating a higher low, creating some more refined bullish market structure, leading to another high at 1755. So the bulls were looking fairly solid for a macro bounce from these low points on gold, but as we've had continued US dollar strength, you can see we had multiple rejections and failures to break these highs, and gold for an extended period of time enter a consolidation phase, especially with the mixed sentiment from the Feds. Right? I did not want to say that this consolidation was a resistance or sellers jumping in the market or a break of bullish market structure unless we got a break below the last previous higher low, which happened to be at 1721. Right? If we didn't break 1721 and we continued to consolidate, there was still potential for a breakout to revisit these highs and print out a new higher high, as gold was having an aggressive bounce from these low points and we were having more bullish market structure forming. But you can see today at New York session, we finally broke those previous lows at 1721 and the low side of this consolidation with a strong bearish candle showing a lot more sellers pressure, showing a break out of the bullish market structure and that higher time frame seller still in control, with a lot of potential for us to revisit these 1700 lows and these potential 1680 lows, especially when we're looking at the daily or the weekly time frame, right? It's almost something like this. We had this aggressive sell side move that printed a new impulsive low or went to revisit a previous low, and a very aggressive bounce from that point that didn't break overall structure, and we went to revisit those lows and even dip a bit lower, right? So here, very aggressive sell-off, new lows printed. This was a great buy bounce that we took advantage of, just as gold does anytime it prints a low and sellers exit the markets and take profit and buyers jump in. You can have a bounce of upwards of 1,000 pips, or you can have a bounce of like hundreds of pips and sellers jump back in, right? But you can see, even similar to here, when you have the pullback, you do go at least revisit these previous lows and then fail to break and see what happens. So same type of idea here now, where we had this aggressive bounce and we played that buy bounce from like 1680s up to the 1750s, but we failed to break the overall structure. We broke below 1721, and we do have a lot of potential to revisit these previous lows now. Especially as the daily candle already broke the low of the previous daily in the wick as well, and the price action still looking pretty bearish, and like the sales are looking good like over the next hour or two coming up below 1705 and or retest of 1715, right? So I'm watching this medium term zone which we're starting to break below around 1707, and I don't think we're going to get as deep of a pullback to 1715 sells. I did send that to Capital Hungry for a Zoom, like during a New York market update at like 12 p.m. for sells that at 1715 retest. You can see took place here. I was looking for another retest possibly for a London session, but I don't think we're going to get that deep of a pullback. I think we're possibly just going to maybe get an upper wick created at these lows and continuation down during pre-London and London session. But yeah, I am looking for sells to target these previous lows and go to 1698. Then obviously watch our reactions here. If we break and retest below, we're going all the way down to 1680s. Right? Current price action is very bearish. We broke out of this consolidation zone, showing us a lot more seller side order flow in the market. We have some nice intraday targets as per our key levels. The US dollar still holding some short-term strength as well, where obviously this is the we're trading gold against the US dollar, so that is a little minor confluence that we could use to our advantage, and especially when we watch the dollar on the intraday time frames. Right? So now primarily going to be looking at the 1 minute to see if we can create any more refined bearish market structure, which we sort of can here. From this sell-off point to this pullback point. As long as we respect this structure, we're looking for continued sells. Like even if we dip a bit lower now and we pull back at London Open to 1707 and fail to break, sells. We bounce off 1698, fail to break the structure, sells. I'd only be looking for any buys on gold if we fail to break these lows and come back above these low points to the left here, and break and retest above this minor bearish market structure. The safer buys would be above 1715. You know what I mean? You can see from this point we had an aggressive low, a pullback phase, a low printed at least, pullback phase. So we do have some lower time frame bearish market structure that we can observe on the 1 minute for potential execution points here. Where as long as we continue to respect this bear structure around 1708, we're looking for continued sells down to like 1700s and below. I'd only be looking for those buys if we see a shift in this market structure on the lower time frame, which can show us deeper potential for a pullback. We have to be mindful of the end of the month and end of the quarterly period though, right? Where we can get some either deeper pullbacks or potential rebalancing of flow moves. But other than that, it's looking pretty good for what we're talking about. So does that make sense for gold? Especially with what I was talking about like at the start of this webinar early on, when we're breaking down the higher time frames. Right? Understand it's still only 1:43 a.m. Eastern. In 17 minutes, we have German markets open up and pre-London hours. And then at 3 a.m. Eastern, we have London open itself. So we have a lot of time to be patient and wait for these trade ideas to develop and come to light, right? And wait for our confirms. All right, so gold, we're just going to be keeping it on the 1 minute chart as we wait for those execution points. If you are already, if you are already following what I was saying, like at 12 a.m., some guys have already started jumping in sells, where you got a bit of like a 30 pip scalp right now. But I still feel we're going to get some deeper pullbacks to retest this area and then continue down. Now, GJ, you guys understand GJ is extremely bullish. The market structure is bullish. Fundamentally, it's bullish. We have Brexit optimism, vaccine optimism, pandemic markets digested and priced in. We have Japanese yen. We have Japanese yen weak standalone. We have global stock markets very bullish, right? But we are now at previous highs where we can get some exhaustion and potential buyers exiting positions if we don't have enough liquidity to break above these high points. We're gonna only take those sells if we break some of this intraday bullish market structure that's also developing, which we'll be able to identify on the lower time frames here, right? Otherwise, I can still see us even getting scalps to like revisit 152 flat or these highs at least, as long as we maintain this structure. I'm just a bit iffy as it's coming to the end of the quarter, and you can see that we could retest the high area multiple times before finally, like, in having pullbacks from that high area, which can run hundreds of pips and still maintain overall higher time frame structure before we finally have enough order flow to break above those highs, right? That's just the way GJ behaves. You can see that better like on the hourly time frame here as well. If we were to zoom out, you can see the multiple as a high is printed there. You get multiple attempts at these highs where you don't break. You do get profit taking by buyers and very aggressive pullbacks. Do you want to get caught in this pullback trying to fucking buy at the high? That's all I'm trying to warn you guys about, all right? So if we don't get a technical break of the current high, there's high probability that if we see price action exhaustion, that there'll be buyers exiting positions. And also we have to keep in mind end of the quarter, end of the month, and this is a short week. We have holidays at the end of this week, right? Same thing here. You see a high printed. You get multiple pullbacks in this area. Even if they're 50 pip pullbacks, that can still fuck up your buy trade. Like, come on. Be smart about it, right? When you finally break that high, you do get a nice move to the upside. Right? Same thing like here. Even here, you can see this was the high printed. You did get, like, if you were trying to buy at this high still, thinking we're going to continue up, and if you don't break that high, you do get this pullback that runs almost 100 pips, right? And then you finally break and retest above the high and continue up. Okay, so as we were watching this bearish structure and this corrective structure as buyers exited positions, that was fine. We identified the exhaustion and the potential double bottom you can see in this area here, right? Which is also a higher time frame key level. Then you finally get a breakout of structure and you start to create some lower time frame bullish market structure. And you literally just ride those buys up back to these previous highs. Now, this is what I'm talking about, the PPLs, everything else. Now, if we don't break this structure, we still have like a 60 pip range to really peak test the previous highs. But this entire area, you could see the sensitivity. Right? So we have to be very mindful here. And this is what I'm going to be looking at on the lower time frames. And even when I'm looking at the price action here, the bullish price action is getting a lot weaker here as well, as we're rejecting 0.500. Okay? Let me clean up this little bullish structure here. So I'm just going from this peak low point. I'm drawing the lower time frame structure from this peak low point that led to a high. We had a pullback that led to a new high. That's why I'm connecting it here as well. And I'm just going to extend it from this point as an identification of structure. So you can see when I'm extending it, we're still respecting that bullish market structure from these low points. All right. Now, I'm only going to be looking for corrective GJ sells if, and I'm only going to be, let me rephrase this. I'm only going to be identifying potential buyers exiting positions if we get a technical break out of this bullish market structure. That's what shows me potential profit taking happening by buyers around those intraday highs. I'm only taking sells below 151.200 on GJ. Okay? Otherwise, if we just have a bit of a pullback here and we don't break this lower time frame structure, even if we come to 151.2 then bounce back above 151.5, I'm still looking for buys above 151.5 back to revisit 151.8 and those previous highs. All right? So if we have any market fear headlines, if we see that our equity markets are possibly weakening, if we get a strong bearish price action and a break below 151.2 and a retest, then I'm taking sells down as we can identify profit taking happening by buyers, which we can take advantage of that pullback phase, similar to like something like this, where this is almost a 100 pip pullback. You understand what I'm saying? When you finally break that minor structure and you get that break and retest below, you can take those trades as buyers are profit taking and price comes to a better demand area. So that's what I'm going to be focusing on here. Yes, we're getting some exhaustion at 151.500. Yes, we're starting to get some more sellers price action, but even if we were to test this structure then bounce back above 151.5, I'm still in a buyer's bias. Isn't it an inverse head and shoulders? I don't give a shit. I don't know what that means. Is that your shampoo you use? You got dandruff? Dandruff control? Or just a normal head and shoulders? Or is it extra dandruff? But anyways. So if I'm only taking sells on GJ, guys, if we break and retest on the 1 minute below 151.200. Otherwise, if we have a pullback, if we have a pullback and we don't break below and we bounce back above, this would still be high risk, high reward buys if we don't break below and create a support, with the safer buys being back above 151.5. I'm only taking sells with a break and retest below 151.2. Understand? Does the gold and GJ analysis make sense? We have to be mindful of the end of the quarter. We have to be mindful of the end of the month. We have to be able to identify profit taking by buyers by observing the technicals, the shift in structure, and the stronger bearish price action. Break and retest below 151.2, that's what's going to show me profit taking happening and higher potential for deeper pullback and sells. Anything above that, I'm still in a bullish bias. All right. Yeah, we have 7 minutes until this hourly candle's closing, and it is closing pretty bearish so far, engulfing the last 2 hours worth of price action. But it's still not breaking structure. You know, it doesn't matter if you want to go here, here, same shit. But you get what I'm saying. Still not breaking that structure point yet. GBPUSD is a different story than GJ though, because GBPUSD has been heavily influenced by the short-term US dollar strength. Even though they're both safe haven currencies, there has there has been an individual fundamental impacting factor on the US dollar, which was the Federal Reserve interest rate sentiment from last week and all the Federal Reserve speakers. From the dollar 6-year lows, we can see those lows got bought up. The demand got increased by what the Federal Reserve said and their interest rate sentiment, and the dollar has been a lot more bullish on the intraday time frames since about the end of February almost, compared to the Japanese yen. This has created a lot more bearish sells to take advantage of on GU, Euro USD, and UCAD buys, right? Anybody take these little UCAD buy scalps I was talking about yet here at 258? It's up like 15 pips, but that's why I'm still in a bullish bias on UCAD from 258 retest or above 2623. And for something like GBP USD, I'm looking for sells actually like here. Key level 378. You know what I mean? If this hourly candle closes as is, next candle retests, and we just continue down to revisit these lows as long as the US dollar, when we're watching it overnight, because we're gonna be watching the US dollar here, we'll keep it on the 30-minute chart. All right. So if the US dollar still remains bullish and continues its way up, this will give us some nice confirms for some GU sells. The US dollar holds a lot more strength in any currency pair it's in compared to the other currency because it's the world's reserve currency. You know what I mean? Remember when I showed you guys the Asian FX spot constant price change? Where the fuck was it? Remember I showed you guys this? Like inside the Reuters terminal with all these different currencies to the left, and how the banks are constantly updating their bid and ask price every millisecond. You can see the banks changing. Can you notice how the terminal itself, it doesn't list any currency pairs? It just lists the individual currencies, and it's automatically assumed the value is against the dollar. This is with global banks. It doesn't matter if it's banks with the location in Hong Kong, Bombay, London, Toronto, Moscow. Doesn't matter what bank it's from. They're still primarily basing their business based in US dollars. They're even comparing the currencies like a universal comparison against the dollar, right? So that's a good little tip when you're trading any US dollar pairs, that if there's any fundamentals impacting the dollar or impulsive moves on the dollar standalone, it's going to have a bigger impact on your US dollar pairs compared to the other currency in that pair. Crazy, right? Crazy shit. So yeah, we already got pretty much multiple retests of 378 key level as we're breaking that bullish structure, but we still have time until London Open and as we're watching through pre-London, so it would be ideal to get another retest of this area in sells, or obviously continued sells below 376, these 1 minute lows. So if we don't get that retest at 378, we can take some scalp sells below these 1 minute lows with continued US dollar strength. And obviously, when we're looking at GU structure, you can see as buyers have exited positions from these highs, GU has been in more bearish corrective structure, as the dollar has held a lot more strength. We've also broken some higher time frame bullish market structure with at least potential to revisit these lows in 365 key level. Euro USD sells coming up soon as well, below these, like here as well. We can see the lower time frame bearish market structure. that's been respected. Once we finally break these 1 minute lows, hopefully with the London volume, we should have a nice sell play down as well. As long as dollar continues bullish, which is looking pretty good, and then UCAD buys like from the key levels column. We're gonna be watching that here. The safer US dollar against Canadian dollar buys will be above 1.2625. The only thing is the US dollar against the Canadian dollar, like the pair UCAD, has been more in a technical consolidation because fundamentally we have had short-term US dollar strength and Canadian dollar strength because oil has been so bullish. Whenever oil is bullish, this is a correlated bullish confluence for the Canadian dollar standalone, right? One of Canada's main revenue sources as a country comes from exporting of oil from the Alberta oil sands out west. Okay? So whenever oil is very bullish and the price of crude oil per barrel is a lot higher, investors translate this as more profit coming into the Canadian markets and stronger Canadian dollar. So as we've had oil bullish and the US dollar bullish, USD CAD's been ranging, technically. You have a tug of war there. Does that make sense to everybody? Yeah? Yeah. Holy, yeah, look right here. Dollar index rising to its highest since November 13th. So the dollar's still holding some strength. Gold's coming below 1705. Oh, new hourly candles. Pre-London candles are opening up. This one has an upper wick so far. Looks like it's gonna give us that deeper pullback still. We're only taking sells below 151.2. We'll put it back on the 1 minute chart here. Gold is looking like it's gonna continue its melt here. Hourly candle closed nice and bearish. Price action's looking bearish. No support or anything. Looking pretty good still as well. As long as we continue to respect this bearish market structure we identified in the lower time frame here, we should go to print a new impulsive low. GBP USD, either the retest of 378 or the break below 376. Euro USD, we're just looking to maintain below these 1 minute lows. UCAD 1.25800 key level. You got sells from 1751.48. That's fantastic to tell us 2 weeks later. Fucking loser. You know what I hate? You know what I hate? Small balls. I hate people who will be in a trade like for a week or for days and then only tell you when they're like 100 pips in profit because they're so scared that they don't want to show somebody else when they're first taking it or when they're doing the analysis. You know what I mean? I hate that. I hate small balls. I hate men who aren't masculine and who have small balls between their legs. I'm not talking about you, London Forex Sniper. You just reminded me of that. Like, I hate, like, I'm not talking about you. I'm talking about people that do that. Like, you know, in trading groups, there's always that guy. I'm not talking about you, man. I'm talking about, like, you know, in trading groups, there's always that guy who's like, or you'll be like, oh, guys, GJ went up. Our buy played out. And he'll be like, oh, yeah. I've been, like, let's say GJ's at 151. He'll be like, oh, yeah. I'm in GJ since 148. You know, it's like, what the fuck? Where the fuck did you come from? Nobody gives a fuck now. You know what I mean? Whenever somebody shares something like that to a group afterwards, it doesn't benefit anybody. It doesn't do anything. It doesn't bring value to anybody. It doesn't help anyone. You know? Yeah, you guys can send charts, no problem. Yo, US 30 is looking good for continued buys as well, above 32,200 here. Some nice ass lower time frame bullish market structure here. US 30. I don't think US 30 is gonna give us deep of a pullback. We created a bit of a zone here like we did earlier. It's looking good, man. Especially if we clear above these little 1 minute highs here. London should give us some nice plays. GJ buys tomorrow at London Open. Write it down. Thank you. I'm noting it down right now. Yeah, we have 55 minutes. Watch out. We have Bank of Japan speaking right now, which can impact the Japanese yen short term. Dollar still gaining strength. Japanese yen still weakening. There has been an increase in capital and businesses alliances among financial institutions. That's pretty optimistic. Amazon partners with Arlington County to open vaccination clinics. We got more vaccination clinics coming. We got some optimism from the Bank of Japan. We're still only taking GJ buys above 0.500, or if we create a support at 0.200. We're only taking sells at a break and retest below 0.200. I'm being cautious about what Bank of Japan is saying right now in case they bring some short-term Japanese yen strength, because the Japanese yen's been pretty bearish, so I wouldn't be surprised if they try to create a little cap bounce for it. You know what I mean? Yeah, we still got a ton of time. I'm just gonna go to the washroom here quickly. All right. Okay, so we still have Bank of Japan and UK Business Secretary. A global pandemic treaty? What the fuck is this pandemic treaty they're trying to make? God damn, $1 billion left Turkey equities last week. You guys know how Turkey's been just taking a shit? They're all buying Bitcoin.
They're all cashing out of their country buying Bitcoin. $1 billion of outflows in Turkish equities. That's crazy. How much of a pullback on gold? I'm looking at 1708 if we fail to break 1708. Let's dissect the price action here though, because when you're looking at the 1 minute, you have to be very cautious of the price action. What I'm starting to see here is, and we take it candle by candle, you're starting to mirror these candles in terms of the size and strength, and we're starting to get some more bullish impulsive candles. So if we make our way back to like 1708 here, and we start to break above, you have to be very mindful of that as you're observing the price action, right? What I'd like to see is, as we come back to like 1708 here for this new hourly candle, the bullish candles start to weaken and starting to notice more bearish candles coming into the scene, right? So I'm watching 1708 for like a pullback point, and then yeah. I'm just gonna keep it more zoomed in so I can watch the price action. It's like something like this. It's like something like this. See how you start to enter this little bit of a corrective bullish structure from these low points? What the hell? You get what I'm saying? And then you start to see more impulsive bullish candles. As you get to a retest point of interest, like for example, in this situation of 1715, you want to start seeing and dissecting the price action, and you can see the bullish candles start to weaken, get smaller in size. Bearish candles start to strengthen, and then stronger bearish candles, weaker bullish candles, and then breaking that structural point as well, right? At a predetermined area of interest. So when we're coming here, like this is good. I like seeing this bearish candle come back to the scene, but if we are to get a deeper retest to like 1708, I need to start seeing the same thing. I need to start seeing smaller bullish candles, more bearish candles coming to the scene, and then we can identify that price action exhaustion and safely take sells back down from that retest point of structure in around 1708, right? But if we start to see more bullish candles and we break above this previous low I was talking about, this order block to the left here, and the bullish market structure, then we're going to be more inclined to see something like this and a deeper pullback back to 1715. So I'm being very mindful of the price action as we come to 1708 to retest this structure. I'm being very mindful if we break above this order block, if we break back above this low, and if we break above this bearish structure. Then I could see some scalp buys back up to 1715. Right? See what I was talking about with these more bullish impulsive candles, and how the price action was looking a lot stronger here as sellers were exiting positions, and the bearish candles were getting smaller. That's what I mean there. And you can also see now in the hourly, around this zone, we're already having a significant lower wick formed and possibly coming above 1708. All right. So we're only taking those gold buy scalps if we break this structure, like, you know what I mean? If we break above the structure, if we break above this bearish market structure, retest and fail to break lower and stay above this order block and stay above this low, then we're taking scalps. Now we're testing 1708 as well. I want to zoom in and observe the price action more here. It's still looking too bullish right now. You know what I mean? This is still looking bullish right now.
I don't use Forex Factory. I have a news terminal here to the left. Gold is dead, man. Down to 1400. We're here scalping and intraday trading, not fucking saying random numbers to each other. Man said 1400. Like you're gonna hold a trade to 1400. You got a $100 account. Still looking very bullish momentum. See what I mean? The price action. We're not seeing any slowdown. That's what I was trying to. That's what I. Yet what I was trying to warn you guys here. That looks like we're gonna get a deeper pullback, stronger bullish candles. So as we're retesting this area, I need to start seeing weaker bullish candles. I need to start seeing bearish candles come into the mix. The dollar is getting stronger. As long as that happens, don't expect gold to go anywhere but down. Yeah, man. Thanks. US 30's ripping it. Like I was telling you guys. UCAD's ranging. Euro USD's ranging. GPUSD didn't break the low yet. We'll zoom in more on the price action here. GJ retested that lower time frame structure I was telling you guys about on the dot, bouncing off it as well. Nice bullish price action we're getting as well, with these bullish candles mirroring these downside moves, correcting them from this retest point. See, first sign of a weaker bullish candle. That's the first weaker bullish candle I've seen yet. No bearish candles yet. No real signs of weakness still. I need to sleep more. I need to sleep more and get more rest. Another sign of a weaker bullish candle. Now if we start getting some more bearish candles here, this is looking a lot better. You get what I'm saying? At least we're not having a strong impulsive moves. We're coming back below this order block. If we get a bearish candle close here, a weak bull, bear, weak bull, bear, it's looking better to reject that 1708 and for seller's price action. But we have to wait till these candles close. 20 seconds there, GJ. If GJ does a little double bottom here and fails to break, and we see more bullish impulsive candles, we could start buying above 400 and then 500. Just to adapt in real time. Even yeah, like right above 400. I'm just saying, like, if we push down here and just create a quick little double bottom at the retest of structure and bounce back above, we could take that 10 pips to 0.5 and then back up. I like the reaction with the bullish price action and bounce from this low so far. The safer buys obviously back above 0.500. It's following our bias so far. Okay, we got one bearish, we got two weak bull candle closes, one bearish close. I need this to close bearish as well. And start breaking these wick lows here. And I can see us going right back down. If this closes bearish and starts breaking these lows, it's looking nice. Oh, what the fuck was that? Not as strong as I wanted. I wanted it to close breaking these lows, but still, if we still get a weak bullish candle close, I want to get weak price action here and then come below here and then easy sells, you know? That's what I'm looking for. Right now it's just reacting. We're starting to notice a bit of exhaustion, but not enough bearish pressure yet. Not enough bearish price action yet. GU, we're watching for a retest of 378. We're only taking buys above 378. Otherwise, we're gonna sell if it retests there and fails to break lower. Euro USD like fucking frozen time here or some shit. What the hell is this? Is this frozen? Yeah, this is fucking ugly. Oh, Syrian president had COVID? How come all these country leaders who are supposed to have access to like more resources, healthcare, and everything else get COVID? Like Pakistan's leader got COVID. Fucking Trump got COVID. Boris Johnson got COVID. These mans got COVID. Fucking makes no sense. Nah, man. Come on, give us some bears. Yes, sir. Give us some nice bearish price action here. Break these lows. We're only taking buys if we break out of structure, retest, and then we're only taking buys if that. We still didn't break structure yet, you know? Yeah, we have about 39 minutes. Let's see what we got going here. UK business. We have a job to convince people that vaccines are the way to go. Man, I don't think anybody likes vaccines. German bond yield rises. Yeah, gold's price action wasn't looking good for sells just yet. We need some more bearish candles. We need to break these wick lows, and then I'm liking what we're getting. Like I'm liking how the bulls are slowing down, but I need some more impulsive sellers to come in as we reject this price point. US 30. Oh, US 30 might give another scalp here as well. Let's watch the price action above this little 1 minute zone we were talking about, ladies and gents. If you didn't catch 33,200, let's see how we react in this area. Obviously, we have to be mindful of this. But US 30, I would rather wait. I would rather wait until at least London Open now. I feel like US 30 could give us another pullback to 33,200. And 1 second, I don't think my girlfriend can sleep. She's calling me. Why should she always call me at these hours? 1 second here. US 30, if you didn't catch US 30 scalp at 33,200, I think it's better to wait till London Open. All right, GJ above 0.500, and then gold below 1708. Euro USD looks like shit. UCAD still looks pretty good for the buys, and I'll be back in a second here. All right, my girl's calling. Alright, sorry about that. Okay, so good advice I gave for US 30 to wait. Looks like we're gonna get a retest of 33,200 again. GJ still respecting the bullish structure. Gold's looking a lot better now. So what you want to see with gold now, as you've had this rejection and more bearish candles come in the scene, you want to see stronger bearish candles and just minor bullish pullbacks, right? We want to see continuations like this with just stronger bearish candles, maybe a one bullish candle in the mix. Like, let me give you guys an example. You want to see something like this. Even if it's like this, majority bearish candles, minor bullish candles in the mix that don't break how we're continuing down, right? Or something like this would be ideal. Very strong bearish impulsive candles, just minor little bullish candles in between. If you start to notice bullish engulfing candles on the 1 minute, if you start to notice more bullish candles than bearish candles, close out and just fuck it, all right? There'll be higher potential. It's going to pull back harder. You know what I mean? So now let's watch the price action subjectively there. This, like, shit like this would be ideal. This is what we want now. Even if it does something like this, like, we want something like this now, you know? So watch the price action now. Like this, if this starts to close bullish above here, back above here, then I'd be cautious. But if it closes weak bullish, then the next one closes bearish, you're still good. Like, see what I mean here? If this one closes back above here, I'd be cautious. You're still good. Beauty. Beauty. And now if this closes as is, we can start to make our way down. We need to clear all this price sensitivity. Oh, fucking scared. What the fuck, gold? Yo, did that flash on your guys' screen too back there? But yeah, you guys get what I'm saying. So now we want just that continuation down, right? Be mindful of the price sensitivity here. What the fuck, man? What's this big ass square keep coming from? Be mindful of here, here, here. But it looks good. Yo, did that flash for you guys as well or nah? That flash, right? Fuck, it scared me for a sec. But anyways, I would secure some partials right now. If you entered here, I would secure some partial profits because a new 30-minute candle's opening up. I would secure some partials and leave the rest risk-free because the new 30-minute candle's about to close and open up here, all right? This 30's closing pretty indecisive as well. In the next 30 seconds. I would secure some partial positions like when we hit that low point, you guys were there. You know what I mean? And then just see what the next 30 brings. The price action's still looking good. We want stronger bearish candles, just minor quick bullish candles. But this new 30-minute candle in like 6 seconds might make a quick upside move and then come down, you know? Like the new 30-minute might do a quick upper wick and then come back down. Maybe even double top up here, you know? Oh, there's a 30-minute. So worst case scenario, at least you got to catch maybe 25, anywhere between 10 to 20 pips on your first position. The rest, leave it risk-free for a scalp. If it melts, it melts. You know? GJ looked like we're going to get our setup above 0.500, but this new 30 doesn't have much of a lower wick yet. GBP USD, we want to break these lows before we sell. Fuck it. Oh, EU. Finally, this isn't much, but it gave 10 pips as well. Finally, stayed below the level. Fuck it, finally. Anybody take Euro USD sells? Anybody take those EU sells from the zone we marked out? Yeah, hopefully we could continue our way down here into some new impulsive lows on Euro USD when we're looking at the hourly time frame here. I don't see why we would reverse in the middle of nowhere here, like on EU, unless there's some fundamental catalyst. Like we should chug our way down here. But don't forget, 29 minutes till actual London Open. All right. Keep an eye. Let's watch GJ price action because we're coming towards 0.500 again. This 30-minute has no lower wick, but it doesn't really necessarily need to create one. We could just have some very bullish price action and structure, and it would just fucking pump to 0.800, you know, GJ. But that's only if we break above. That's only if we break above on the 1 minute time frame. Let's watch the price action. We need a nice break and retest above 0.500. We're reacting there on the dot. Gold's still looking good. I would like this candle to either close as this current candle. I want it to close as is or close bearish. But if it closes weak like this, it's still looking pretty good with what we're talking about as per the price action we want to see. I would like to see some bigger bearish candles, but, you know, that's not up to me. See what I was talking about? How the new 30-minute, it didn't break that area we're talking about? And do you see what I was talking about with the price action on the 1 minute? How you confirm the buyer slowing down? Like, you don't want to start selling here, start selling here. You want the mix of smaller bullish candles, some bearish candles, your impulsive candle, little break and retest. Right? Now, we've created a pretty significant 30-minute wick, and this is a very weak bearish candle close, and look where we're rejecting. This looked like we're getting a hard reversal here. This was a very weak bullish candle close, and if this candle closes bullish engulfing this bear, we're gonna go back up. So I'd watch out now, all right? This bearish candle, like where we rejected, I was telling you guys the price sensitivity area. How this candle closed very weak bearish body. This bullish engulfing. It looks like the 30 made an aggressive lower wick. And it can end up flipping back bullish here at these lows. So let's keep an eye on this carefully. GJ, no break above 0.500 yet, but that's okay. We're still iffy about that 30-minute candle. We're still good? No, we didn't. I'm talking about here. Sorry, let's zoom in. I'm talking about here. These candle bodies. We're still good. This isn't that clean of like a, you know what I mean, break above it yet. We're still good. Just like I was watching here. Just like I was watching here. Because if you have your entries here and here, you're still good when you're watching the price action. I want to get candle closure bodies below here and below here. Like this. But you know what I mean? I don't like how it closed here again. It's the new 5-minute candle, so the scalp is pretty good for like 35 pips at the high, 10 pips at the low, you know what I mean? All right, GJ here. Let's keep an eye on this. I'm liking this bullish price action. I'm liking the momentum. I think a nice scalp's coming up. Oh yeah, we saw this headline here, 225, 10 minutes ago. Economy opening by June 21st. Positive confluence for GJ short term, or for GBP anyways, possibly. Guys, be mindful of this. I know we're above 0.500, but our neck is not out of the woods yet. You have to be very subjective. Sorry, you have to be very objective when you're watching price action using the PPLs. If you got an impulsive buy entry, you can't extend your buys unless you break above these rejection points. This is only about 5 pips above the PPL where we had all these rejections, right? So if we retest here, that's fine, but we still have to break above here to show more bullish momentum. All right? So watch that area there. Now gold's starting to show me some seller's exhaustion here. If gold has bullish candle closures above here, I would exit out any running positions you have as well. All right? This is starting to show me some seller's exhaustion, but as long as we remain below here and we don't get any bullish engulfing candle closures above there, we're still good. If we get bullish candle closures above here, I would close your running positions if we close there, you know what I mean? I'm not liking this price action as much. I need some more stronger bearish impulsive candles. It's looking like the sellers are slowing down a bit here. But I'm watching this area. Still good as long as we close below there. Okay, baby. I like that. I like where we're rejecting. Gold gonna melt in 3, 2, 1. What would you guys do if it fell 100 pips right there? Then you guys gotta call me the market whisperer or something. What time is it? It's not even London Open still, eh? We started the stream so early. Fuck, I'm getting sleepy. The GJ buys were good at 0.500, that break. I'm just saying you can't extend it unless you break above that little 1 minute high point we're talking about. Oh, sorry. You guys send any charts or shit? Oh, what's this, Jawad? Sorry. So JPY had better than expected unemployment and retail sales data today. Can this influence GJ to drop today? Well, this would actually be more considered as market optimism because it's showing improved economic data, and it would actually take away strength from the Japanese yen, which is why we've seen GJ has been pretty bullish through the intraday time periods. You know what I mean? So do you guys understand how when you're watching the price action, gold didn't have any candle closures above there? Now we're breaking below these significant price points as well. And now the next area I'm going to be watching to make sure we don't get any price action breaks above is here. As long as we don't break above this low area, we're still good now. As we're watching the candles and bearish price action. You guys like that fucking... Come on, I gave you guys gold step by fucking step. Who gives you guys analysis from the 3-month chart all the way down to the 1-month chart, looking at each individual candle, telling you, hey, if you break above here, close. If you don't, we're still good. Who gives you that? Who? What? What? GJ, let's go. There you go, guys. All right, that's it. W's in the chat. GJ buys 15 pips. Gold played out. Gold gave almost 40 pips. Close some positions, secure some positions, leave your runners free. Leave your runners risk free. Leave your runners risk free. Leave your runners risk free. That was a straight dissection on gold price action. Right there. Leave your runners risk free. Gold reacting at this low point. Leave your runners risk free. Where I'd be looking at on gold now is making sure we don't break above here. So what I'm looking at now on gold is making sure we don't get any bullish candle closures back above here, and that we can break below here, and then we're melting. And this area. If we come above here, then fuck that shit. You know? I know, but I'm giving people exact dissection of what to look for, how to be confident in it, what to expect, how to identify the price action exhaustion. Oh, look at the rejections we're getting here. If we break below, we're good. 1708 retest. And this 1708 retest, I told you guys before we even started watching it, I was like 1708 retest would be nice. You know? So that ran 40 pips. But hopefully you guys got to catch at least like 10, 20 pips of that. And at least you got some runners risk free. Remember, on these streams, we're scalping and intraday trading, you know? We want to at least secure some profits as scalps. But anything above that is just gravy. You know? At least secure some profits as scalp. Set yourself risk-free. Prevent any losses. Okay, now for gold, we can see the rejections at these lows. Some bullish price action coming in. 15-minute candle closing. But as long as gold still remains below here, it's looking pretty good to me. Look where we're rejecting the zones. Look at where we're fucking rejecting the zones. It's a matter where the candles close, the size of the candles, what it's telling me about the strength. I don't like these last two bearish candle closes at this previous low. They closed pretty weak. You know? What am I looking for London Open? Fuck it, yo. If you guys already... Oh, GJ! We're not looking for shit. GJ blessing the gang. No, I made gold money I made my gold like 20 G's for the month. And now I'm waiting for the new quarter. I like this. Do you see what we're rejecting? Ladies and gents, look at the price action. Oh, we have a new 15-minute candle though coming in. GJ is blessing the gang. Do I not help you? Oh, okay, let's see. Gold call. Gold call. GJ call with that momentum. I told you the momentum was looking strong. Euro USD sells. Anybody in those EU sells still? They're still active. EU still active. UCAD fucking ranging, bitch. US 30, nothing yet, no retest. GU fucking ranging. But yeah, it ran pretty good. If you guys made money, we do not need to take any of these trades. Mohammed, I did not take any of these scalps. I did not take a single trade tonight. I already made around 25k CAD through my gold trades. I only took about maybe 6 different setups, you know? I am now waiting for the new monthly candle and the new quarterly candle, and then I'm going to take more trades. I did not take a single trade tonight. I was just giving information and giving analysis for you guys and gals, you know? I didn't take nothing. I'm keeping patient and waiting for the new month and new quarter. I don't want to be greedy. I don't want to risk any of the profits I earned. You know what I mean? There's always opportunity available in the market. Come on, gold. Bust this low, man. And it's coming down to 7. If the gold breaks here, it's melting to 1700. It's just reacting at these lows. New 15-minute candle. Pop, 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 pop. Oh, yo, guys, let's zoom out here. GJ coming pretty close to like these previous minor intraday highs at 151.8, but the bullish price action is blessed. Dollar still holding strength. Everything is still looking pretty good. The fuck? Who the fuck is Lenny Henry, and why do I care what this guy says? Come on, yo. What other stream be doing this for you guys? Be honest. Send the stream a fucking like. Anybody who caught some trades, message me at JHC Capital. Show me what you guys caught on Telegram. I gotta go to the washroom. I've been holding in a piss because everything was looking so exciting, you know? GU, we're only looking for the sells below 1.376. Nice 25 pips on GJ. Gold, come on, gold. Gold's still going here. Price action is still looking pretty good so far. Like, it's still stronger bearish candles, still weaker bullish candles. Jesse, you took those 0.200 buys, right? Great job, bro. And lucky you held that whole time. Yeah, London's not even open yet. We're already done. Yo, if you guys caught trades, we're done. Like, why even trade London? We can just chill and watch the charts. Let's all just chill and watch the charts for like another hour through London. If there is something that's like, wow, this is 100% probable trade, then we'll take it. Other than that, yo, fuck London. Agree? You guys agree or what? Don't be some greedy assholes. Respect the market and appreciate what these vicious markets give you. You know what I mean? These markets are vicious. People kill themselves over losing too much money in these markets. Yeah, these fucking... No, please. London's opening. GBPJPY? GBPJPY? Fucking... You know the hyenas are coming out when fucking London's opening. GJ, please, it's still bullish, right? It's still bullish, sir? Sir, please. No hyenas in this chat. No vultures in this chat. Only lions. Do lions hunt all day and night? Or do lions strategically plan and conserve their energy and hunt a couple of times and primarily rest and reap the rewards? Only fucking hyenas and vultures be getting the scraps and are fucking not respected in the animal kingdom. Do you want to be a hyena or a vulture? Or do you want to be a lion? You know? No, I'm being... Okay, guys. Jokes aside, let's be 100% serious here. Jokes aside, I'm being dead-ass serious. Human greed is no joke. When you make money in the markets, and especially as a collective... Let's get serious, guys. Let's actually tune in right now. When you're making money, and especially as a collective, you're literally getting a chemical shot of dopamine straight to the brain. Your heart rate starts to increase. You get excited. You get happy. You also get greedy. All right? As your heart rate is increasing, as your dopamine is increasing, your brain is subconsciously already looking for the next dopamine hit to get. That is not a high probability trade. It's looking for the next dopamine hit to get. Meaning you're looking for the next impulsive trade to jump in. This 99% of the time ends up burning the retail trader. And what happens is they'll jump in an impulsive trade feeling very greedy, not knowing when to stop, over trading based on a dopamine hit, their heart rate racing, not thinking logically anymore. And as soon as they take a loss, because they're running on a high, they can't accept that loss, and they end up taking a major loss and burning through their profits. This is no joke right now. All right? So please, when I say that hyena shit, I know it's funny, but you have to take a breath. You have to emotionally neutralize yourself. If that means you need to jerk off, if that means you need to go take a walk, that means you need to go do some push-ups, that means you need to shut your charts off, then do that. But as soon as you let the dopamine, and it's the same on the inverse side. When you're winning, and when you're winning trades and you're feeling great, it's a dopamine hit, it's a rush, it's excitement. All of these extremely impulsive positive emotions also impact your decision-making process just as much as the negative emotions do. Everybody is well aware that when you're angry, when you're losing, that you're gonna revenge trade, that you're stressed out, that you're not paying attention, that you're running based on anger, revenge trading, and emotions, right? And what that does is it leads to illogical decision making. But it's the same when you're winning as well. If you can't emotionally neutralize yourself after winning a trade, you're gonna end up making a stupid decision based on greed, based on that dopamine hit, based on chasing short-term impulsive satisfaction. It's a drug. It's no different than any other drug. When you get that hit, you want more of it. That hyena shit is just a visual representation of like that's how motherfuckers get. Your heart's racing, your eyes are wide open, you're excited, you made money, you're looking for the next trade. It's like simmer the fuck down. Take a breath. Let's look at the hourly candle that's closing. Let's look at the news. Let's look at the price action. Let's look at what else we can take advantage of. Right? So don't forget your mental reminders. Emotionally neutralize yourself right now. I get it. GJ played out some nice buys. You made money. Gold, you made some nice buys. You made money. US 30 or EU, you made some money. But you have to also know when to take that self-control back. All right? So let's just take a chill pill now. If you made some money, exit your positions, leave your runners risk-free, leave a partial runner risk-free with your stop loss and profit on GJ or gold. Man, we're running through London without a single worry. Our boy, half the other London streams haven't even taken a trade yet. Be thankful of what's going on here. Appreciate what the market gives you, even if it's 10 pips. We're chilling right now. We're gonna let London open. If the trades extend and your runners get more profit, hey, even better. If we get aggressive pullbacks and your runners get taken out, but another setup presents itself, guess what? We're gonna be emotionally neutral enough to again dissect the price action, understand our bias, and take another trade. All right. So 5 minutes till London Open right now. I'm going to be back in 5 minutes myself as well. Oh, fuck. You fucking melted on the 1 minute here. I'm so good, man. Wow. Beautiful. I'll be back in 5 minutes. All right. GJ with the heavy pullback all the way. That's why I tell you guys secure positions as scalps. You know what I mean? GJ with a full pullback here. Right at London Open. Look at this hourly candle close. Completely reversing right before London Open. That's why we secure as scalps. And if runners get taken out, it's all good. GU though, finally breaking the low to set up our sells. Let's see how this hourly closes in 16 seconds and how the next hourly opens. Because we rejected at that same high point, right? But that's why we bagged out those positions anyways. We might get another setup on GJ if the hourly... Oh, this is the... No, this is the hourly candle. All right. Let's just push it up first. All right, so the London Open candle right now doesn't have a lower wick and pushed up first to grab some liquidity. So I'd be cautious. We might get a deeper pullback here again. You guys get... Okay, now we're making the lower wick here. We're going to get that deeper pullback. We're still not selling GJ unless we come below 0.200. I don't care like if GJ wants to mess around here and play around and come back above. I'm only selling GJ. We're only adapting to GJ sells below 151.200. I'm just going to let London Open do its thing. Let's see if it's just grabbing liquidity. If we don't break these hourly body lows and we come back above 0.200, we can literally just fill this wick and continue right back up. I'm only taking sells below 151.200. Same analysis from the start of the webinar. All right. So let's just let it do its thing here. We already expected a deep pullback for London Open anyways. We already exited out our positions before London Open anyways. Worst case, you had a runner get taken out and profit. Gold's still good. Gold's still chugging away here. $50 pips, you know. EU still active good. US 30 fucking going wild here, but we're watching 200 reactions anyways. Oh no, I do not want to leave. All right, now I'm going to start dissecting the same way I was dissecting the gold 1 minute price action for you guys. I'm going to dissect the GJ 1 minute price action for you guys, all right? Right now, there's no buys, there's no sells. We're getting strong bearish candles. It's just London Open. I would need to start seeing bullish candles, price come back above 151.500, weaker bearish candles, stronger bullish candles, break above this little minor zone where we rejected at London Open, and then you can take buys at 151.15. I'm also going to be watching reactions down here. Right now, the price action on the lower time frame, the momentum actively is still looking bearish. All right, if this candle ends up closing bullish engulfing, I like that, and I would like us to come back above 151.500 to show us that that was just the hourly lower wick and a liquidity grab. I need to see some stronger bullish candles now. I need to see something like this. That downside move get corrected. In like an equal amount of candles or so, right? One to three 1 minute candles back up 151.5, or at least start to create a support in this area, then come back above 151.5. But right now, it's still looking, if this closes like that, still too weak. Still gonna continue down. Can I look at GN? No, I'm not looking at GPNZD, trash ass pair. Gold. Still making its way down. I would like to slap 1700. That's what I like to see so far. If we engulf it in 2 to 3, like in the same amount of candles here, and we get the price action above 151.5, we might get another GJ setup. We got that hourly lower wick made. We can come back above 151.5. We can literally go back to revisit these highs and fill that wick range, or at least get another scalp. But if you already made some money, don't overtrade then. I'm just breaking down the price action for you guys of what I'm seeing candle by candle on the 1 minute time frame of, and how I enter stuff and what I look at, you know. I'm liking this price action for buyers pressure and sellers exhaustion. Now we have to come back above 0.500, and especially if we come above that little medium rejection point. We need to come above 0.500 still. Gold price action still looking good as long as we don't get any breaks back above here. And as long as we don't get strong bullish impulsive candles and we don't come back above 1703, we should still keep chugging our way down. If we come back above 1703, there's deeper potential for pullback. Just like we were watching here, just like we were watching here. You guys get what I'm saying? So we're starting to get some weaker bearish candles here and some stronger bullish candles, but as long as even if it does something like this, but it doesn't break this area, it's still good. It's still going to slowly keep chugging its way down as long as we don't break here. So I'd be watching right here. All right. Gold, no bullish candle close above it yet. Look where the candle bodies are closing is what's significant. It wicked there on the dot. It's still rejecting there. We need the candles to close above 0.500. See how even here it's rejecting for now? So we might get maybe like a little double bottom here or still fail to reject, but we still need to come above 0.500. And even above here still safer as well. That's still like a 15 pip trade, you know? Anybody still holding EU? Still making its way down here. Still active 22 pips. NZD itself isn't like a crap pair. I just don't like trading any risk currencies against risk currencies. Like I don't trade GBPJPY. I don't trade like, what else is there? Like, you know what I mean? Like NZD, GBP, stuff like that. I'd rather trade risk currency against safe haven pairs or vice versa. Let's see some of these headlines here. See, gold. Watch here. If we break above here, I would, because we're starting to get some bullish impulsive candles. If we get candle closures above here, I'd be very cautious because I'd see a deeper pullback coming. You know what I mean? See how we're reacting there sort of on the dot? But otherwise, if we reject and still turn bearish and do something like this, then it's still good. I'm just breaking down the price action for anybody holding runners still. That like maybe you'd want to secure some running profits here if we do get candle closures above. Still looking all right. Nah, that's not looking. I just want to see where this closes here. It's trying to get a bit stronger with the bullish momentum. We were close to 1700. You have to understand, when we zoom out, yeah, this is looking like it might give a deeper pullback. But we have to understand when we zoom out, we're digging deeper and deeper to test these previous lows right here. So there is the potential for sellers to exit positions and buyers to jump in and get a bounce from this area. That's exactly what we're going to retest now. It would be nice to slap 1700 on the dot, but we have to be very mindful here, right? Okay, GJ, if this bullish candle closes as is and we retest 0.500 quick on like the next candle to make a quick lower wick, that would look a lot better. Damn, don't tease me like that, GJ. I wanted to close bullish. Well, it didn't close like that, but you get what I'm saying. If it does close, if we get some bullish candle closures above there, it's looking good. I jinxed it. I jinxed it hard. But we're not over trading anyways. That was a bit of an aggressive pullback, but we still maintained below that area for now. Yeah, you're right. Damn, now if this closes above, gold's gonna do a much bigger pullback. This is looking a lot better on GJ. I like how this 30-minute created that wick. We're flipping back bullish. Once we clear this little medium zone here, I jinxed it again. But once we clear here, we should extend back to these highs. I'm going to quickly make a protein shake. Give me a second here. Yeah, I jinxed it again, AR, you're right. Another jinx. Shouldn't have said anything every time I say Dollar's still bullish. Stock markets across the board still bullish. Yeah, I'll be back. I'm gonna go make a protein shake. Then when I come back, I'm gonna look at everybody's charts, alright? Everybody start sending me your charts when I come back, alright? Yeah, Dan, when I come back, send your chart. I'll check it out, no problem. So let me go. I'll be like 2 seconds here. All right, new 15-minute candles. Okay, new 15-minute candles. Yeah, GJ rejecting our safe buy area. So obviously we didn't get the safe confirmed to extend these buys, but we're still not breaking bullish structure yet either. Gold with a bit of a more aggressive pullback, but we already banked out like almost 50 to 60 pips there. Euro USD retested that low zone again. EU giving a bit of a pullback. I think we capitalized on the best trades pre-London hours, to be honest. Pre-London was way better than London Open right now. What do you guys think? Hey, make sure you guys send the stream a like. You know what I mean? Send the stream a like, subscribe. How many people are here? 300? We should be able to get 300 likes. How many dislikes? 10? Fam, you know only my fucking enemies are disliking the stream. Sitting in their Fruit of Looms, pissed. Just pissed off. I'm helping so many people. Every single stream. They're just waiting. Like, when's this guy gonna fuck people over? When's he going to make them lose? You know what I mean? They're just waiting on it. They're just praying on it. You know how many times Daniel Savage, Paul, these guys probably be watching my streams, just waiting for me to fail, waiting for me to say some bad information, just waiting when I'm finally gonna lose. When I'm finally gonna say, sorry guys, sorry about that bad call, man. I'm really sorry, but it hasn't happened. It hasn't happened. You know? Anyways, GJ new 15-minute. It's still valid if we break above here. This was a nice bullish engulfing candle. We just need to clear this little 1-minute zone we are looking at to the left, and we can get a nice play back up to these highs. You can't fail in a stream where you don't take positions. Let's see. Oh, this guy. Oh, look. Those gold cells we were talking about. Wow, great job. Oh, you made more than your 1 month salary in the Philippines from this free live stream? Those GJ buys? Oh, wow, great job. Oh, you guys sending charts? Sure. Oh yeah, send me you guys charts. Let's check out charts now, because London's pretty shit so far, you know? Keeps rejecting the same price point, ranging right now. The fuck? Are you in sells or buys? Buys, right? But what the fuck is this? What's this thing, dude? Trading mode extreme? What the fuck is this game difficulty you got on? What's this being trading mode extreme? That's some fucking intense shit right there. Oh, it's a bot? If this is US 30, which, yeah, it looks like, I'm still in a buyer's bias, so it looks good to me. Yeah, try hard mode. Looks like a video game, right? Trend power, 45.58%. How is that, like, calculated? What if this said 30%? Would that change your, like, would this change your mind? What if this said, like, 43%? GJ, yeah, let's just stay out of GJ for now. USD CAD, you want to sell USD CAD on the 1 minute time frame for about 30 pips. Let's check this out. I would only sell USD CAD below 1.258. Where were you looking? That's not you. I would only sell UCAD if we break below 1.258. I'm only gonna look for GJ buys if we come above this little shitty zone we're looking at here. London's trashed. At least, luckily, we got to catch those nice trades before London, eh? Oh, you caught that US 30 scalp from 33.2K we called. Good job, good job. No. Send me a chart. Oh, very nice entry you had at 0.200, bro. You rode that great, eh? Look at all those EMAs support too. Good job, bro. Good job, good job. UK business secretary, nothing important there. I should show my wins and losses on the screen. Like, what do you mean? Oh, sorry. Did you guys send charts? Send the codes. Dan, I'm gonna check yours out right now. GBPJPY, potential buy above 151.8. That's the safest bet. I don't like your risk versus reward though. And also, your sell for here, the potential sell, your entry should be at a break below 0.200, not at like 151. I feel like at 151, like I feel like if we were to break 0.200, your entry would get triggered here. A pullback to 0.200 would take you out, and then we go to your take profit. Same type of shit here. I feel like your entry would get triggered here. It would take you out and retest, then go to your profit. Just with your risk versus reward setup and where you're actually looking for the entry and stop losses. I would have my entry at 0.200 for the sell and be taking that 20 pip range with a 10 pip stop loss, which would end up making this a 1-to-2 risk versus reward instead of like this 1-to-1 you got here. Where it looks like you get a higher chance of getting caught, where you get an entry and get caught in a pullback, and then it would go back down, and you'd be like, "What the fuck happened, man?" You know? Oh, like write them down? Oh, shit, too lazy. I'm too lazy for that today, just because. The stream started at like midnight, you know what I mean? I started this stream early. I've blown 3 accounts. You've blown 3 accounts, you're at minus 3,400. It's crazy. Do I do anything besides setups? Yeah, like we do in the Capital Hungry private chat. I always send like these New York market updates or these type of intraday trade idea webinars where I just give specific, like, you know what I mean, analysis and points. We do higher time frame analysis. We do swing trade analysis, day trade analysis, and scalp. What? Yo, Mac, what's up, bro? Where you been? All right. Euro against the yen. I like how I see all JPY pairs I trade at resistance or slightly above. I want it to break above and continue to new highs. Your buy analysis makes sense if we can finally break above these previous highs, as the Japanese yen is still weak. We're also starting to create some bullish structure here on the hourly and entering this bit of a bullish wedge where what you're looking for is exactly what I would be looking for as well. That's great. How many of you traders analyzing the markets? Like where? Like right now? Like you think it's a fucking team of us right here? It's just me. Sitting in my fucking room in my Fruit of Looms. I'm sitting in my dirty ass Fruit of Looms talking to you guys. It's just me in my room. Yeah, I agree with this. Looks very nice. Capital Hungry? That's just run by me. Yeah, it feels crazy that there's that much content from just one person, right? I don't even know how I do it sometimes. But it's fun, so I don't mind. Yeah, I'm sitting in my Fruit of Looms. No shirt. Fucking sweating. I don't care. GJ, great trade you took. I liked your partial TP. The full TP would be ideal, but we have not got there yet. Mac. Oh, no, that was yours, Mac, your trade. Alright, that was a nice trade, bro. What about it, though? Oh, it missed the partial TP. Oh, then it came all the way back to your entry? Oh. Yeah, a bit of one, but I don't know where the low of this order block would be, you know what I mean? I'm just seeing it messy, to be honest. I'd wait for some just price action confirms above this little shitty zone, the rejection point we're talking about. Which might come right now in the next 30-minute I feel if we get a nice candle closure above here, next 30, quick lower wick down, and then Pacific Union got same spreads as Vantage. They got good spreads. Gold's still active. Like, it's not like your runners got taken out, but if you close them, it's all good. Euro USD melting back down like we wanted it to. UCAD going bullish like we wanted it to. Oh shit! Anybody take fucking US 30? Still looking beautiful. US 30 is looking nice. I'd watch, obviously, reaction here. New 30-minute candles coming up. Gold, we gonna slap 1700. Yeah, I thought this was a very good stream in my opinion. Like from the start, we did analysis from like the 3-month time frames all the way down to the 1-minute price action. Fruit of Looms? Fruit of Looms is an underwear brand. I just make Fruit of Looms is an underwear brand. See that rejection, guys, at these highs on the new 30? I am starting to get a little bit sleepy though now, because we started this a bit earlier. Yeah, new 30-minute candles, hourly candle closing in 29 minutes. We haven't had any more. We haven't had any more economic headlines. Like, it's starting to get a bit quiet. Starting to get a bit quiet. Yeah, if you guys want to keep sending charts, feel free to send charts. Otherwise, I'm probably going to be ending the stream in about 20 minutes. 15 to 20 minutes. Oh, is it? Oh, yes, oil. Thank you for reminding me. Sorry. Yeah, buys above 61.5 look good. If we have continued market optimism. Looks good. Just give me 1 minute here. Just adjusting my mic. Okay, sorry about that. We're good. Oh, we tapped 1700 pretty much. GJ finally broke above that area, went to revisit these highs as well, like we were talking about. Gold 1700 coming to 1698. The gold call is great. That was a very nice call. Same with the first GJ call. EU still active as well. No headlines. No headlines. Yeah, there hasn't been any headlines for a few updates here. Solid night though. Solid night since pre-London hours. I'm gonna check out a couple more charts. I don't use Fibonacci, David, sorry. Alright, USD JPY. If it breaks resistance, keep going up. Yes. US dollar is bullish. Japanese yen is bearish. Price action is bullish. Even a retest to your trend line here, then buys, or a break above resistance buys looks good. But yeah, sorry, I don't use any Fibonacci tools. So I cannot comment on that, on what time frame is the best to use Fibonacci. Yeah, it was a solid night in my opinion. I'm going to be ending the stream soon in about 20 minutes. If you guys don't want to send any more charts, because it's not like we're going to be looking for any more trades to take. It's more just extending any running positions and continuing this analysis through like New York session. We talked about a lot through this stream. Gold's still going too. We talked about a lot through this stream, from like higher time frame analysis, quarterly candles, what to expect for the next month, fundamentals, micro and macro, any economic events we had going on, news, price action, market structure, price action, technical analysis all the way from the 3-month time frame to price action analysis all the way to the 1-month time frame. You know what I mean? With the news headlines, everything else in between. So can't ask for much more than that. Yeah, it was a pretty solid day. It was a good day. It was a good day. GJ still looks good. GU's back. GU did that quick scalp and then messing around now. Euro USD still digging deeper now. US 30 still active. Yes. Don't forget all your stream reminders, aka follow all the Capital Hungry free resources. Capital Hungry Twitter page. Doesn't post as many headlines as the news terminal. That's all for private members, right? But it does post more headlines than Forex Factory and all these other websites. They usually be copying from this Twitter feed. The Capital Hungry free Telegram analysis chat, where I send important headlines, any chart updates, market updates, and stuff like that as well, and live stream updates. And then obviously the Capital Hungry YouTube page you guys are on now. You have tons and tons of educational webinars and content. If you want more than that, then you have to join the Capital Hungry free Capital Hungry private Telegram channel. If you want to get access to daily London Zoom sessions, market update webinars, intraday trade idea webinars, weekly recap sessions, mental reminders, key level price alerts, session open and close reminder alerts, these Zoom sessions that we do, other members sharing their analysis, the news terminal, 50 plus educational webinars and the webinar vault, the community, the weekly flow. It's a lot of stuff. It's a lot of stuff, you know? It's a lot of stuff. So, yeah, the main feed just has tons of information, analysis, sessions all the time. The trade room has all your key level price alerts, session reminder alerts, other members analysis, my chart updates as well. The Capital Hungry newsroom you get access to, the Capital Hungry banter chat, and then you get access to, if I'm logged in, you get access to all these educational webinars as well, which can teach you how to be like me. You know what I mean? Great pips. It matters about the pips you caught. So great job. You lost 30% of your account due to trusting a gold signal guru. Wow, a signal guru. Very interesting. Oh, fuck yeah, gold. Tubby's in the chat. Key level smacked on the dot. Bang, bang. Bing, bang. Who is this gold guru you are following? If you don't mind me asking you, Pauline. Yeah, like see how gold just hit 1698? For people who aren't watching the charts, like the key level price alerts automatically get sent to the group. Because we look at other pairs and stuff too, right? Like we look at Euro AUD, we look at AUD USD, GBPJPY, Bitcoin. We got Bitcoin levels in analysis. You know what I mean? EU still sinking very nicely. 30 pips for you guys. Gold mines? What's gold mines? I'm gonna search up any gurus you guys have followed. Gold mines. This guy, Gold Mines Global. Let's see this fucking retard. Holy shit, 12,000 members. He just sent you guys a gold sell signal now for fucking 30 pips. Wow, this guy's got so many members. How come these gurus get so many fucking members and attention? The fuck? These are like my key levels except 10 pips different. He even called them key levels. What the fuck is this guy? Yeah, these guys are good marketers, eh? My FX Journey Fundamentals. Like, bitch, you don't know what any of this shit means. I hate this bitch. This bitch scammed so many people. My FX Journey. She lost so many people's money and said it was because her cat got sick. Like, what a retard bitch. She only started doing fundamentals recently too to have something more to sell, because she was account managing She failed people's accounts, crashed millions of dollars of investor money, went ghost for a bit and said her cat got sick, and then came back all of a sudden with fundamentals. Yeah, that's in the now. My FX journey, fucking dumb cunt. Yeah, she's a retard. Yeah, she's a cunt. Gold fucking melting. If we stay below 6, okay, so I'm just gonna extend this bearish market structure from the lower time frame, and we're gonna be playing that through New York. Yeah, a lot of people claim to study fundamentals or share fundamentals, but they're really just sharing news articles. They just share news articles or journalist articles, you know what I mean? Saying, "Hey, the Fed said this," but they don't tell you how to use these fundamentals in your trading. You know what I mean? Like you know how I teach you guys about investor behavior, market sentiment, what the Fed said and how it'll impact the dollar and how we can use this for trades, you know? Everybody else just sends articles. They just send some fucking articles. Don't really teach you much. Hourly candles closing in 12 minutes. 1708 sells. Ran great. Yeah, so gold, we can see from this point, sell, pullback, sell, new impulsive low created. If we push a bit lower and get a pullback to like 1698, 1700, and still fail to break this bearish market structure through New York session, you guys know what to fucking do. All right. Yes. If there aren't any questions or charts, I'm gonna be ending the stream in about 5 minutes. All right, everybody. I'm gonna go eat something and get some sleep. I thought it was a good session. Cause I've been streaming since like 12. We started a bit earlier. It's been going for like 3.5 hours. You know, almost coming to 4 hours here. Yep. Don't forget the key fundamental points we talked about. Economic events through New York session and later an Asian session as well shared on the screen. Yeah, Ron is telling you some good advice right there. For the guy who's crying about $1,000. Mental reminders. Sorry, I was just answering an email quick. All right, so if there's no more questions, if nobody else wants to send a chart, if nobody else has any questions or concerns, this is last call. Otherwise, I'm going to be ending the stream, and I'll see you guys on Thursday for the YouTube audience. Capital Hungry private chat. I'll see you guys like in a few hours. You know what I mean? I'll probably send an update, or I'll send an update later at Asian or something, and then we'll do a Zoom session tonight. Yeah, oh, yeah, sure, Dan. Send it over. Oh yeah, I see it up there. Yes. Yes, sir. That's much better risk versus reward and entry points. Yes, sir. Except for the buys. The sell should still be at 151.200 as the entry for the sells. But the buy, much better risk versus reward. Entry at 0.500. Your stop loss below these candle bodies. Much better setup for your buys compared to that one-to-one setup you were showing earlier. The sells, though, your entry has to come down to 151.200 would be the sell entry. Because here, like, you're not breaking structure yet. You know what I mean? And you're like buying and selling. Same spot. But I like how you adjusted your buy setup in the risk versus reward there. What? Oh, you guys are asking questions now. How long have you been trading now? With leverage? Oh, you meant my name. I've been trading since like 2017. So like 3.5, 4 years almost. 3.5 years, I guess we'll say. Do you think oil will end the I can't fucking read that shit, man. Let's fucking learn how to type. God damn, give me a headache. Geez, with the end of Q1 for this year, is it possible there's reduced volume? Trading GJ today and the candles are much slower and smaller than what I usually see. Yes. With the key fundamental points, there is higher probability that there's more investors or traders sitting on the sidelines or not actively trading during this week. One, because it's the end of Q1, and two, because it's also a short week with Easter holidays at the end of the week. So yes, we were already anticipating possibly technically ranging markets or not as strong impulsive movements due to the coming to the end of Q1, the end of March, and the holidays at the end of this week, Friday. What's the most important type of trading style should someone with less than 1 year experience focus on? Whatever trading style you want. I don't fucking know, bro. Like, I don't know, man. Whatever trading style that fits your lifestyle and preference. Like, if you have a very busy lifestyle and you can't be in front of the charts for like a 2 to 3 hour window to actively scalp, then maybe scalping is not for you. But I would have to know your job schedule, your lifestyle to give that suggestion. Nice analysis, bro, but why are you not analyzing silver as it moves like gold? Gold has higher market cap, more market participants, more market volume, higher value, better spreads. So for those reasons is why I trade gold, not silver. Do I swing trade? No. I intraday trade or scalp. Which property firm would you suggest? Fuck, man. How many trades do I need to limit myself for a day? If you're a scalper, I'd say go with the 3-strike rule. How do you outsmart a gorilla? By not being a monkey. Which broker do you suggest for Indian traders? Go ask Modi. I can't fucking help you there. He's gonna fuck you guys in the ass, so you gotta talk to your government there. What's this? GBP USD. Nice sell, came below resistance. Your RR is a little bit wide here. It's like a 1-to-1 for the scalp, but I do understand what you're going for. It makes sense of targeting these previous lows and going a bit deeper. So for the scalp, it's good. Just be cautious that you might get a bounce at these lows again, right? So because your target's anticipating a new low being created, but I'd be watching at these lows at least. What do you eat to get better at trading? What you would eat to get better at anything? You want to fuel your body efficiently and make sure you give it the energy, make sure you provide the nutrients needed so you can perform to your top capacity. Are stop hunts real? I wouldn't say stop hunts are real, but the markets are made up by humans and human psychology, where you have to understand that there's tons and tons of losers in the market and very, very few winners in the overall scope of the amount of market participants that are involved. And this is due to human psychology. When you have the majority of the market participants from a retail trading perspective, repeating the same psychological mistakes, whether it be emotional trading, gambling, over leveraging, over trading, trying to flip their accounts, trying to make $1 million overnight, not having realistic expectations, etc., then you have that majority constantly losing together. So there's no such thing, in my opinion, as a stop loss hunt. If you feel like you're getting constantly taken out of your trades, you're probably entering trades with the mass majority of retards. You know what I mean? But no bank is targeting your fucking 0.5 lot on GJ. No bank is even targeting your 100 lot trade. You are just a part of the mass group of retards doing retard shit. So you're going to get treated like a retard by the market. Just like if you're going to the gym and you're not working out properly, you're not eating properly, you're not resting properly, it's not like the gym is attacking you. It's not like the gym is stop hunting. It's not the gym is stopping your gains. You can't blame the fucking gym or the equipment. It's because you're doing retarded ass shit. You're a retard. You're not working out properly. Your form's not right. You're not eating right. You're not resting. So you're not going to get the gains. You know? Yeah, my best advice is just don't be a retard. You know? Really put the time and effort in for what you want, no matter what it is. Because anybody can become knowledgeable at something. But not everybody can put effort in. But anyways, guys, I'll see you guys later. I think that's the last of the questions. The printing industry, yes. No more questions. I think we're all good. All right, everybody. I'll see you guys later. Take care. Make sure you guys like and subscribe. Share this stream around with your friends and family. Send it to Daniel Savage's chat. Send it to all the any marketer you know. Send it to their chat. Send it to Goldmine. Send these YouTubes to Goldmine's group. Send it to the IML. I don't give a shit. But anyways, guys, for real though, I appreciate the support. Thank you for coming through. I'll see you guys all next time.